Hi, everybody. Welcome to Bitcoin Unleash, the Builders Edition. It seems like only just yesterday, we were all in real life joining together as a community in Miami for one of the first Bitcoin Unleashed events. But so much has happened since then. It's unbelievable. Stacks Ventures, the Web3 Startup Lab, and the Mintery all completed their latest cohorts. The foundation has provided more than $1 million per quarter in grants, and the residency program has now crossed over $1.5 million committed since its inception 18 months ago. Stacks addresses have surpassed 445,000 with more than 5,000 smart contracts and millions more transactions and NFTs. Hypernets became subnets, hyperchains became subnets. Council took on Discord. Alex announced their Stacks bridge to bring USDC on Ethereum into Stacks. BNS, or the Bitcoin naming system, went bananas a few weekends ago after the launch of Gamma's new marketplace, seeing over 500,000 BNS names listed and over $10,000 in transactions in the first weekend alone. Rider debuted the world's first social wallet integrated with BNS and Rider community IDs. Gamma turned one. CrashPunks came to life in their first animated NFT short. Stacks.js sees several updates. Clarinet readies itself for the upcoming 1.0 release. Hiro Wallet's browser extension gets Ledger support, and we're that much closer to Stacks 2.1. Today's event will focus all on you, the founders, developers, and the community that are building on Bitcoin. Today, we're going to hear from the industry's thought leaders and leading voices over two different tracks. Our Builders track, very focused on high-level discussions about what is to come in Stacks 2.1 and much more, along with our technical track that will go deeper in depth into Clarity, the Stacks architecture, and beginning to build in Stacks as well. With that, we're very excited to welcome hundreds of you from around the world. And if you're talking about today's event, please do use our hashtag Bitcoin Builders. And a big thank you to our sponsors for helping us to put on yet another great event around Bitcoin Unleashed. Thank you, Hiro, Xverse, Citycoins, Spread, Damon, Mechanism, and Fungible Systems. With that said, I'm your host today and your MC, Kyle Ellicott, partner at Stacks Ventures. Welcome, everybody, to Bitcoin Unleash, the Builders Edition. Kicking us off today will be our first panel, Strengthening the Connection to Bitcoin, Stacks 2.1, moderated by the one and only Gina. Gina, the floor is yours.
Thank you so much for having us. And thanks to everyone who is here and present in the audience. I'm Gina Abrams, and I'm thrilled to be joined by Brittany Laughlin, Executive Director of the Stacks Foundation, and Muneeb, Stacks co-founder. It's really incredible to be here today among this group of builders. So, it's been about 1.5 years since the Stacks smart contract layer for Bitcoin went live. This discussion is on Stacks 2.1, as well as the next major upgrades for the network. So to kick things off, I'd love to hear from both of you, starting with Muneeb, on the key learnings from the past 18 months and how they translate to focus areas for Stacks ahead. Muneeb, I'll kick it over to you.
Hey everyone, excited to be here. So I think, Gina, as you said, that with the mainnet launch last year, some of the key functionality that went live, first of all, it was like smart contracts ability, right? Like Clarity language went live. It was the first time that you have a big Bitcoin layer that has decidable contracts. People can actually program things in a very secure way. And really interesting mechanisms like stacking went live, where people are earning a native Bitcoin yield. They can actually see this interaction that they're locking capital on a layer but their Bitcoin rewards are actually appearing on the main chain. Right? And all of that was very exciting. We saw a bunch of builders coming in, trying to build Bitcoin NFTs, trying to build different applications like Alex and others. And I think in terms of learnings, one thing that is obviously clear is that the network speed and capacity is something that requires more work. And I think there are fundamental things here because being a Bitcoin layer means that in many ways you're tied to Bitcoin block times, which are roughly between 10 to 20 minutes. And there has been a bunch of work going on, two things in parallel. One is around subnets, which people can think of that as a scalability layer where you can do things much faster and kind of like settle through the stacks layer on Bitcoin. And the other is that can we actually crack this issue of just doing more transactions and more blocks in between two Bitcoin blocks. So that's a very exciting thing. That's like probably after Stacks 2.1. There's a bunch of R&D work going on there. And I think the second big thing that stands out is that for a Bitcoin layer, probably one of the most important things is what I've been calling the Bitcoin write problem. Like right now, the contracts on the stacks layer, they can read information from the main chain, but they can't really write back, right? Or in other words, like you can't really have a Bitcoin derived asset in a trustless way that you can peg in and out of the layer, right? So that's a pretty big area where a bunch of R&D work has been going on, and that is not scheduled for 2.1. We'll discuss what's going into Stacks 2.1 shortly, but those are kind of like the really big two things that are focus areas after 2.1.
Yeah, I think Muneeb hit on a lot of the big things that have happened and that are coming. I think looking back over the past 18 months, it's just been incredible to see the amount of creativity, the amount of new businesses that have started, built completely on stacks. We've had some great NFT projects get launched. We've seen bridges. We've seen DeFi applications. There's just hundreds of ways to use stacks and very interesting things and what's been great about seeing that is just the amount of utility that comes into our ecosystem. And that just kind of compounds. We've seen, better integrations with exchanges and wallets and custody. That was one of our big goals. And we now have global access to our token. And that means really a global market, not only for people who hold stacks, but for builders who want to reach stacks holders, who really want to unleash the ability to build on Bitcoin to a global scale. And I think that's really important because Bitcoin is the most globally held asset. And so being able to offer new tools and services to anyone worldwide who already knows Bitcoin is something that we've dreamed about and we're seeing become a reality in a really big way. So we're really excited about what's yet to come. We know that with some of the upgrades, there's even more functionality. So maybe you've never held stacks before, but you've held Bitcoin, you believe in Bitcoin, and you want to do more with it. That is the thing that entrepreneurs in our ecosystem are working on. And at the foundation, we're really excited to be able to offer more grants, more programs like the Mintery, where we help creators mint NFTs on Bitcoin directly, very easily. So I think there's just a lot of stuff that's been building, and we're going to see next year as really the year of building on Bitcoin.
Excellent. Thank you both. Now, let's dive a little bit deeper into Stacks 2.1 and the immediate upgrades ahead. Brittany, I'll hand it off to you to start this one.
Yeah, so Stacks 2.1 is a really exciting upgrade, especially for builders. It focuses on building better connections into Bitcoin. That includes things like better writing in with Taproot, better bridges, more functionality, better UX for any people who are holding stacks or building with stacks. And then I think one of the things we've heard a lot of stacks holders excited about is just continuous stacking. So if you're already a stacker, you're already earning maybe a 9% annual yield in Bitcoin for locking in your stacks. But you often have these cool down periods where you kind of have to wait a cycle, you miss those rewards. So with continuous stacking, this will be a better experience and also just mean more APY for your Bitcoin. So we're really excited to see how builders use that and then also how stackers get excited about that additional yield.
Great. And Muneeb, is there anything else you'd highlight in terms of the connection to Bitcoin and what Stacks 2.1 unlocks that you're excited about?
Yeah, I think Brittany mentioned continuous stacking. That's obviously a pretty big feature that everyone was asking about, because it makes stacking more programmable, because now people can control when they're unlocking capital more clearly, and there isn't this like cooldown period that they have to worry about. So a lot of builders were actually really asking for that functionality. And I think there's also another update, like most people probably don't even know about this, but there was actually there was a security corner case that people were worried about before the mainnet launch, due to which there was actually a sunset period. Like, we are always very concerned about safety first. And now stacking has kind of like proven out in the market and in the real world setting enough that sunset period is being removed, meaning that stacking is here, it's working, and there are many other improvements that are kind of like baked into the improved contract for POX that's kind of like going live. Brittany also mentioned like Taproot support. I think that's great. So other than SegWit, we'll have Taproot support as well, which actually unlocks program functionality on the Bitcoin side. So Stacks, the Bitcoin layer, is all about the interaction of the main layer and main chain and the Bitcoin layer. So if Stacks supports Taproot and people want to actually write sophisticated scripts in Taproot and publish that on the main chain, that unlocks a lot of functionality. There are a host of features that are going live. A lot of them are like very developer focused. So there are certain things that the developers want to do. Let's say they wanted to query Bitcoin blocks or other types of information from the Bitcoin chain. I think those types of things are going live with 2.1 as well. So I think people should think of that as like it's actually a combination of a lot of hard work that happened over the last 12 to 16 months. And a lot of those goodies are packaged in Stacks 2.1 along with the major things that we discussed.
Yeah, one thing I just wanted to add to that is that all of these improvements have come from the community. Requests, for different functionality, improvements in UX, the vote to say, we want stacking to stay, we don't want to sunset it. So this is part of our SIPs process. This is open to everyone in the community. Everyone has an opportunity to write a proposal of things you would like to see changed, as well as vote on this upcoming proposal. So none of these updates go live without voting, without the community. So we'd love to have you guys more involved, whether you're a stacker or you're just getting involved. That's how these improvements get made. And that's why what you heard from Muneeb, these are all things that developers have been wanting or Stacks holders have wanted. It's because that's the way these upgrades happen.
Yeah, and I think I should add one more thing, that a lot of people are obviously looking at the network performance and how many transactions are happening and what are the scalability things. So 2.1 sort of helps with that as well, in the sense that there's like new clarity features that are going live. People can write more optimized smart contracts that can actually, you can package more information in existing blocks. So just like we've seen some improvements to the how much transactions are getting packed on existing blocks, even with the recent upgrades that happen. 2.1 also helps there. So we don't have to, it's not like everyone's kind of like waiting for subnets or the next major improvement that happens. A lot of stuff can be done even before that. And 2.1 is going to help move the needle along these dimensions as well.
Thank you so much. We covered a lot of ground there. I wanted to sort of double click into one of the items you mentioned, Muneeb, in terms of Taproot support. I think that some of the upgrades that 2.1 helps with assist with things like implementing mining pools, et cetera. And so I'm curious about, how do you see 2.1 and upgrades beyond 2.1 really feeding into sort of miner decentralization? And also, what's the cadence that a community can sort of rally to see these network upgrades?
Yeah, I think miner decentralization is a pretty real thing. There have been many community discussions around it. I think there are multiple SIP proposals that are floating around for miner decentralization. And I think Maddie, who's a resident at the Stacks Foundation, has done some analysis as well. So I think I'm actually pretty excited about it, but because in one of his analyses, at least there's one set, the dust mining one, where the number of miners would go up to like 30 plus even today, just with the dust mining work. And I think that is something worth following up. That is not something that is currently planned for Stacks 2.1. But again, as Brittany mentioned, there's a set process through which the community can come together and work on it. The thing that is going live with 2.1 is better support for mining pools. And I think that could help a lot as well, because it's not just like we want to increase the number of independent miners that are there, but that you can have like trustless pools, and a lot of people can participate in those trustless pools, which actually helps with miner decentralization as well.
Mm-hmm. Yeah, and for those folks who aren't familiar with Stacks mining, you don't need an expensive, hardware setup at home. Instead, it uses Bitcoin. So if you hold Bitcoin, you can become a miner, you can contribute, and you can actually earn stacks for being a miner. So I think the focus for mining pools is that how do we allow more people to be involved in that process and make it really easy? That strengthens the network, it adds to the security budget, and it gives a great way to get exposure to stacks if you are interested in having more.
Excellent, thank you. Now, we have touched on sort of the network efficiency and, really unlocking that in future upgrades. Is there anything else that you'd want to add in terms of that conversation that people can really get excited for and sort of see live on GitHub and help contribute to as well? Muneeb, anything that you want to add in that dimension?
Yes, I think, as I mentioned, that a lot of this experience around Bitcoin, like there's a long history of this, right? Like people have tried building new functionality directly on the Bitcoin base layer as well. If you think about counterparties that started NFTs or early versions of BNS, where people are registering domain names directly on Bitcoin, everyone had to wait for these 10 to 20 minutes before the transaction can get processed. And if you're doing a ton of transactions, like thousands and thousands of transactions, you are filling up the mempool of the main Bitcoin chain, right? Similarly, I think like transaction fees spike up when you're trying to do these things. So over time, it's like abundantly clear that scalability and new functionality is going to come to Bitcoin through Bitcoin layers like Lightning or Stacks or others that are adding this functionality. But most of these things are still limited by Bitcoin's block times. So one of the key things that I've been personally doing more research work on, along with a lot of really bright minds in the ecosystem, is that how do we crack that fundamental problem that where you don't have to wait for Bitcoin block times. Like right now, the Stacks blocks are tied to Bitcoin blocks. A Stacks block happens when a Bitcoin block happens. And if you can actually do more blocks and more transactions in between two Bitcoin blocks, that basically is the holy grail solution, right? Like, because then all of those transactions can settle on Bitcoin, and Bitcoin really becomes like the settlement layer. So people can have much more reliable block times where, pick whatever is a good UX experience, but then it's like Bitcoin blocks are also variable, right? Like it's not just that they take long, you also don't know, there isn't a guarantee that, let's say, every 5 seconds there is going to be. But you can get there. You can get there through a Bitcoin layer like Stacks. And that is obviously going to be a major consensus upgrade. But there's already kind of like, interesting kind of like breakthroughs and work towards it that I'm actually spending a bunch of my time these days on some of these consensus upgrades.
Yeah, we actually just hosted an ecosystem offsite kind of talking about these priorities. And I think the biggest rallying cry from the community is deeper connection to Bitcoin and speed and scalability. So those two are the highest priority across the ecosystem. We're getting a number of those improvements in 2.1, but the real work is currently in development. There will be some designs that will be shared with the public. I know the blockchain engineering team is working hard on those, but I think to Muneeb's point that we can help scale Bitcoin and we can help scale apps that want to build on Bitcoin. Subnets are coming in Q1. That's a really exciting update. All of these neat things like GameFi or, instant transactions, those come with another layer. And so being able to open that up to more developers, I think is really exciting. I know existing builders in our community are already using the testnet for subnets. So if you want to check that out, definitely do. But I do think this speed and scalability of the main chain is our core priority and something that's in the works, in the development, and you'll see a lot more updates about this very soon. We just recently sort of doubled the number of blockchain engineers in our ecosystem. It's likely we'll double that again. So if you're looking to join us, definitely there's some open roles across the ecosystem. But I think this just adds more capacity to ship these big upgrades sooner. So we're really excited to see what comes out of that and what people can build with these new updates in the next month or two. And then not even 6 months away for subnets coming in Q1, see what we can build that.
Yeah, and I'll just add one thing that given how decentralized this ecosystem is, it is really not the case that there is any single company that is responsible for pushing forward any improvements on the blockchain. This is really a decentralized ecosystem. Think of that as, how the Linux kernel is open source software, and there are many businesses that have a business interest in trying to kind of like push new features to the Linux kernel. And that's how this ecosystem is evolving, which can mean that sometimes things are slower. But I do think that in the last 2 months or so, various different businesses and entities are kind of like tackling that challenge head on. That yes, there is a lot of overhead when 11 different companies are trying to kind of like contribute to open source software. So how can we be more efficient? And I think there is this structure of working groups where you can be a part of a very specific thing that you want to see improved, and then collaborate across different entities and work in an open source way. And I think those are kind of like growing pains. As an open source project, like if you once learn how to be very efficient across multiple entities, I think then in terms of long-term sustainability, that's a very strong thing, right? Because you're not dependent on any single company. It's an ecosystem, it's a decentralized open source project, and we've figured out how to be efficient in that decentralized setting.
Mm-hmm. Yeah, like I think, just adding to that, like there's already this awesome NFT working group that's been thinking about, better Bitcoin NFTs, airdropping NFTs to people's Bitcoin wallets, some really cool stuff that's coming. And that's all self-organized. There's a number of community members who've helped put that together and are pushing that forward. The other shout out I have to give is to Hiro Gamer. If you don't follow him on Twitter yet, please do. He's our SIP resident. He's the one who's collecting feedback from the community, letting people know when there's new SIPs, when there's new proposals of what people want to see. So definitely check out his feed and let him know if you have any ideas, because that's a great way to get, turn ideas into code in the Stacks blockchain.
Thank you so much. We've covered a lot of ground here in terms of all the upgrades ahead. Muneeb, last 30 seconds, anything you want to touch on in terms of just the opportunity and what you'd like to see over the next 2 years for Bitcoin? Yeah,
I think overall, if we zoom out, I think it's okay to admit that all of the Bitcoin layers, Lightning, Stacks, RSK, Liquid, everything combined is relatively at an early stage. If you look at some of the rest of the industry, like if you look at how many developers there are on Ethereum or some of the newer chains, and I think that's fine because there are challenges on the Bitcoin side in terms of dev tooling, infrastructure, even capital. But I think the Bitcoin thesis is that the opportunity on the Bitcoin side is also larger, right? Like there's more capital that can get unlocked. Bitcoin is actually decentralized and grassroots, and this is a thing that is durable and will be here for a very long time. And if you look at the scenario, and if you're an entrepreneur, or even if you want to deploy capital, like you want to run towards where the puck is going, right? And where there's opportunity that is yet to be unlocked. And I think Bitcoin layers are definitely one of those places where there's a ton of work to do and a ton of opportunity and a ton of potential that can be unlocked. So it's a call out to all of the builders that if you want to do really interesting things in the Bitcoin ecosystem, like some of the challenges might be getting solved, and this might be the right time to start looking into Bitcoin layers.
Mm-hmm. Yeah. I know we're at time, but I just want to add to that. If you are a builder, we have grants, we have free education for clarity, we have a great community. So if you aren't sure where to start, or if you have an idea that you want to kick off, come to stacks.org. We have a ton of great resources to help you take that idea, put it into reality, and be part of this next wave of Bitcoin innovation.
Thank you so much, Muneeb and Brittany, for being here today, sharing your thoughts, and obviously this community for making it all happen. I'll hand it back to you, Kyle.
Thanks a lot.
Thank you so much, Gina, Brittany, and Muneeb. To the audience and community, if you're not fired up and excited about Stacks 2.1 and what's to come in our ecosystem, get ready because our next presenter will continue that excitement, and we've got tons more content and thought leaders to share more with you as well. Next up, I want to welcome Will to talk a little bit about empowering builders with Stacks grants. Will, the floor is yours.
Thanks, Kyle. I appreciate it. Yeah, I'm here today to talk about the grants program. And so at the Stacks Foundation, where grants originate, we have an underlying philosophy of wanting to support developers, designers, community leaders to build a more open source and user-owned internet powered by Stacks smart contracts, Clarity smart contracts, and secured by Bitcoin. And grants are just one point on what we call this spectrum of support. So as you know, Kyle represents Stacks Ventures and Stacks Accelerator. You could think of that as like one very far end of the spectrum, and all the way down to the other end is our community grants, free Clarity education through workshops and boot camps and hackathons. And then scattered in between, there are several different points. So there's event grants, developer grants at different scales, chapter grants, which focus on supporting different regions and mobilizing their communities in those regions. And then there's also the Stacks Web3 Startup Lab. And so where to start with your journey on this? So there's a recently launched pipeline that launches from grants.stacks.org, and that will take you and lead you to all the resources that you're going to need. So that'll point you to the grants GitHub repo, which outlines all of the docs, the FAQs, application guidelines, deliverable guidelines. Those docs are under construction at the moment. They'll be updated early next week, and that will sort of give you all of the details that you need. If you go under issues, you'll also see all of the applications, past and present and current. And then if you go to the projects, you'll see the projects board that is a Kanban view that helps you understand the phase that each grant is in. And then there's discussion boards, which we're also activating now. And so when you begin your application process, come armed with some, important but only a handful of things. So what's your final deliverable? And as Brittany mentioned in the previous session, we really want to focus on improving speed and leveraging the Stacks 2.1 unlocks and deepening the connection to Bitcoin. We're also big fans of anything that helps empower and attract Clarity devs to the Stacks environment and or founders. And then you want to sort of help set your roadmap, help us understand what those milestone deliverables are going to be to get from start to completion, help us understand what your project mission statement is, and then anything that you can provide as an attachment, a pitch deck, code repos, even a short video, links to community testimony, sort of supporting the idea that you're going to work on, and really be cognizant of, what are the key problems that you're hoping to address? How you plan to measure success? And what's your plan for community engagement throughout the process? And then the phases that you go through in the grant journey is first the application phase. And you'll see that we recently revised the process from being applications approved on a rolling basis to a cohort model. And so we actually just awarded our first cohort of grants, which we'll go through later on in this presentation. But the cohort works to where there's an application opening date and then an application close date. And so in between, applications can be submitted. You may get a pre-review, some dialogue occurring in the GitHub comments. And then once the application phase closes, it might be closed, but that means that the next upcoming cohort application phase would have opened. So applications are technically always opened. But then during that period of time when they're closed, that's when the grant review committee begins their review process. So we had a goal last quarter of having at least 80% of all application reviews be done by non-foundation staff. And with the cohort of grants that were just approved, we're really thrilled that we can say every single one of those applications received at least a minimum of 3 reviews from non-foundation staff, which we're really proud of. Once those are approved, you begin the onboarding phase. And so that will start with a Zoom call where we kick it off. We explain the whole process. We'll send a secure and private survey to collect some information to help us onboard you. There is a third-party KYC process you go through to verify where you live in the world, your identity, and then a contract that needs to be signed. Once that's all done, the first payment's dispersed, and then all subsequent payments are done at the successful completion of those milestones that you identify in your application, concluding with your final deliverable and final payment. And so in an application, the things that we look for, we really just want you to go through all the docs that are available, educate yourself on the process. All the work needs to be open source, and it can't be dependent on any closed source projects for the outcome to actually work to its full extent. We really want to focus on new and novel concepts. So, go through, search through the past applications, educate yourself on what's already been funded, really try to figure out how you can provide something new and novel and not duplicate the efforts that have been previously funded. Make sure that you're engaging the community and making that demand be known. We encourage you to start small. We like all first-time builders or first-time grantees to first be awarded a grant for up to $25,000 before we'll entertain larger grants. Make sure that you are paying yourself a fair wage, but think about the hours and the total budget that you're asking for, and make sure that it pencils out. And again, we don't want to sort of award too large of a grant at first. So let's build a relationship. Make sure not to include any material goods, whether it be laptops or software, things that are being purchased just for that. We like to really focus on the hours that go into the development of software and of different improvements to the Stacks protocol. If there are any types of audits or third-party services required, make sure that you flag that in your application so we can work with you on those items. Make sure that you're focusing on the Stacks mission. We want to accelerate the user-owned internet. Again, new and novel. Be very clear with your project scope and deliverables in your audience, what the outcomes are, how they're going to be measured, and then really try to think about how you can help us all feel comfortable with the application, and has it been de-risked? Have you built some familiarity with the team? Are there any technical dependencies that might need to be first unlocked? If so, just highlight those for us and how you plan to overcome any of those types of challenges. And then here you can see the range of different grants that were approved in this latest cohort. These are really high value, high impact projects in our opinion. So it could be anything from the Stacks Wallet Connect, which is going to allow for the Stacks wallets to leverage the largest Wallet Connect protocol that's available out there, Lightning stacking pools. So now people, as Brittany was saying, having continuous stacking that will actually be able to be paid out in Lightning payments, and a whole another range of other programs that range from hackathons on the community side to a SIP that focuses on staking for NFTs and fungible tokens at the very technical end. So lastly, I would just encourage you to go to grants.stacks.org and make sure that you reach out if you have any questions, and we look forward to seeing any applications come our way. That's all I have. Kyle, back to you.
Thank you so much, Will. And to the audience, if you haven't done so already, as Will mentioned, we do encourage you to apply for grants and also look at the residency program. Will's your guy. Make sure you check him out on Twitter as well. Follow him, and also feel free to follow up with any additional questions for him and the team as well. Next up, the build roll call. It is time to talk a little bit about some of the builders and projects that are happening in the Stacks Accelerator and the Stacks Startup Lab. A ton of development has happened over the past couple months. As I mentioned, multiple cohorts have gone through both programs and the Mintry as well. Let's take a look at some of the exciting products that are being built and more. With that said, Andy, the floor is yours.
Hi there, everybody. This is Andy Shannon. I'm based in London, and I am an advisor to a handful of venture funds in addition to startups. And I've been working with the Stacks Fund and Accelerator for the last number of years. And I'm really happy to have today Trevor Owens, the managing partner of Stacks Venture, and Albert Liang, the co-founder and CEO of the Web3 Startup Lab. Guys, thanks for joining today. How are you?
I'm doing great.
Good.
Thanks, Andy.
Very nice. Welcome.
Yeah, excited.
Trevor, maybe we could start with you, just because you have, as I know, such a interesting background in this industry. Tell us just a 2-minute overview. Where you're from? How'd you get into this space? How did you get involved with Stacks and Stacks Ventures?
Yeah, so I had the great fortune of knowing the founders of Stacks, Muneeb, Ali, and Ryan Shea, for many years. I was an early advisor back before they raised even their very first round. Back in the Blockstack days. And when Stacks 2.0 launched Mainnet at the beginning of last year, I sort of started checking out what they were doing again, and just thought that the tech that they'd come up with was quite brilliant and was positioned strategically in the perfect position in the market to unlock a lot of value and be differentiated from the other blockchains that were out there. And so I approached the team about, what they were doing in terms of the venture side and investing in companies, and they kind of pulled me in at that point. And from there, we got Stacks Ventures off the ground. Andy, you were one of the first people I went to as well to involve as an advisor. So great, been great working with you, and thanks for your help. And we've invested in 47 companies so far to date. We've built that really strong base community, and we're looking forward to growing even further, expanding our portfolio and investing in outstanding teams.
Very cool. Maybe to start it off, tell us just a little bit about the combination of how you invest, what you invest in, and the type of program that founders can enter when they start to work with you in Stacks Ventures.
Yeah, absolutely. So maybe I turn over to Albert for a second to talk about Web3 Startup Lab, because a big part of where we're going in the future is actually leveraging Web3 Startup Lab. And so I've actually known Albert for many years, kind of brought him into the Stacks ecosystem here to help us to grow our top of funnel. Because one of the things that we do with the Stacks Ventures is we have the Accelerator program, and then we work with Albert on the pre-Accelerator side. And the Accelerator is really a 3-month program that's focused on fundraising. And so we don't have much time to work with and incubate those builders who are just getting started. Sometimes we will anyway, depending on the experience level of the team and the timing in the market. But generally, the vast majority of entrepreneurs need a pre-acceleration process where they can validate their ideas and pivot and get to the right solution validation and close to product market fit before they even start fundraising, because we're really focused on the fundraising side. So maybe Albert can talk a little bit how that process works.
Yeah, very cool. Albert, maybe just a 2-second background about yourself, where you're located, how you got involved as well.
Yeah, as Trevor said, Trevor had the good fortune of knowing the founders of Stacks. I had the good fortune of knowing Trevor. This basically the Startup Lab has been a long time in the making. Goes back when Trevor and I we met 7-8 years ago now, and about 6 years ago, Trevor took a look at the consultancy I was doing, which is basically helping people turn their ideas into startups. Basically, the no-fly zone, as Trevor was saying. These are too early for the accelerator, so they come to us. And Trevor said, "Hey, why don't you just turn it into a pre-accelerator?" Right. And so from then on, we started doing classes, doing mentorship, doing all the groundwork that they need to do in order for them to build a strong startup foundation to hit the ground running in accelerators. And then lo and behold, several years later, we have 21 cohorts now in Shanghai. That makes us not only the longest running pre-accelerator in Shanghai, but actually in all of China. Right. And I'm very grateful for Trevor bringing us into Stacks, because our 22nd cohort was actually the first cohort on Stacks as a pre-accelerator. And we just finished that up a couple months ago. Yeah.
Amazing. Can you maybe tell us a little bit about, if you call it a program, how many get in, kind of what's that process look like? And then once they join, how long are they in it for? And what kind of support do you give?
Wow, that's a great question. That's actually the core of what we do. And basically, the last cohort, we reviewed 674 applications and 25 teams got in. Wow. So roughly that ratio. And about 1/3 of them made it through the gauntlet. We call it the gauntlet because it's very grueling. It's all the groundwork you have to do if you want to grow your startup and have a chance at the accelerator and raise funds. And the service we provide is, the high level is they get a community and they potentially can find their co-founder. Many of our teams did match up. That's one. The second is we provide them with a scientific method. Part of it is based on a lean startup method, but applied in a Web3 context. The third thing we give them is a lot of Web3 tools, right? A lot of things are, the physics are different for Web3, right? The tokenomics, the gamification, the business models, the blockchain, right? How do you apply that? Also, how in the context of Bitcoin, how do Stacks and Bitcoin create unique value in the big blockchain ecosystem? So these are all the things that we provide them to build that foundation, so they have a solid foundation to build their startup empire, right? And so the next phase of that, if they pass this foundation building period, then they get fast tracked into Accelerator, right? Which helps them grow their startups more and helps them prepare to get in front of hundreds of tier one crypto investors, blockchain
Makes
investors.
sense. Yeah. So just to make sure I heard you right, for the entrepreneurs on the line right now, you do not have to have a startup in existence. You can be a single founder. You're involved in almost a matching process once they get in. Is that right?
Yeah, exactly. You just have to have the courage to start. You have to have the be passionate about something and have the mental flexibility and the grit to move forward, right? And to find something that is truly valuable, truly worthwhile to turn it into a startup, right? And then we do the rest for you.
That makes sense. What kind of, I'm sure founders are asking, what kind of time commitment, or is this a side project for them at this point? Are they supposed to be not having any kind of jobs outside of this? Just give a flavor of those 25 folks. Like, what are they putting into this and for how long?
That's a super question. So basically what we found was that when people are going from zero, like at the ideation stage, a lot of them are either a 9-to-5 job or they're transitioning from something to something else. So to make it easier, we split the program into two legs. The first leg is a 1-month boot camp, and it's all about customer validation, market research, competitive research, user interviews, etc. And this is a weeknight and weekend program. So if you're one person, you'll probably take you about 20 hours a week. If you team up with somebody else, it's going to take you a little bit less, right? And then if they make it through the first leg, that 1 month, and they have a group, right? Like, for example, one technical co-founder or one marketing community person, then, and if they hit the milestones, then we'll graduate them into the second leg. And that becomes more intensive. Right? That can still be managed working a job, but eventually the expectation is, all right, are you building something so worthwhile that you want to go all in? Like, it's like a no-brainer for you to switch over from your 9-to-5 or whatever else you're doing. Maybe it's a Web2 business, right? Over to this project. And that is a condition to get into the accelerator, that you're going to go all in on this, right? You're committed.
Got it. Yeah. Is there any money involved or an investment, or are you expecting these teams raise a little bit throughout this process, or is it completely bootstrapped at this point?
Yeah, that's a great question. Most of the investment comes from us in terms of, we'll spend our time, we'll put together the program, so they don't have to give us any cash per se. In addition, we also help them if they find a idea worth building on top of Stacks and Bitcoin. We help them talk to the grant committee, and perhaps they could get a little bit of money to build up the MVP to get a little bit of traction. Right? Yeah.
Before we go to Trevor, because he seems to be the next step, you maybe give an example of that though as well, like one of the founders that came in, and I don't know if you can define what were they working on, how they met a co-founder, and then if they got a grant or not, just so we have a tangible example.
And we had quite a few people get grants, I think, from your first cohort.
Yeah, we had about 5 so far. Oh, wow, 5 so far.
And in total, the total capital for that was like $200,000 or?
Yeah, it was about 150 to 200,000 total. Yeah, and
for 5
what
teams
happens
is
and then what happens is a lot of times once they start getting to the project, a lot of times sometimes they talk to a customer and they become a potential investor. Where do you have a couple of projects where the customer is like, wow, can you build this now? We'll give you 100 or $250,000 so you could build it right away. Right?
Oh, wow.
So there's always like the thing about entrepreneurship is if you're in the mix, there's definitely like element of serendipity or like money falling out of the sky. You just have to be in the mix, right? Yeah.
So it sounds like you're really setting entrepreneurs up for success once they get in the program. And then what kind of, so after they would, let's say, graduate, you're saying that, a lot of these teams then go on to work with Trevor. Trevor, do you want to pick it up there? Like, how do you guys coordinate with the labs function, and how do you maybe look for deal flow in general that comes into your program?
Yeah. So, I mean, the pre-accelerator is definitely our priority going forward in terms of it provides us a really great pipeline to get to know the founders and to really help them get on the right track. You know what I'm saying? So when it comes to the actual accelerator, we only have 3 months, and there's a lot of pressure on the teams to actually raise funding. And so a lot of founders will sort of, instead of like cleaning out the closet and doing those sort of foundational things that are going to benefit you long-term, the short-term pressure of having to raise funding immediately can cause them to sort of delay those things that actually end up hurting them in the long run. And so that's why the pre-accelerator gives people this sort of like open environment to take risk and to change things. And they also have, someone like Albert, who's a very intense kind of coach, the kind of person that you need, who's not going to let you, get away with any of your own BS. As entrepreneurs, we tend to sell people and try to convince them and use the reality distortion field. But, what Albert and what I do as well is we try to pop the founder's bubble. They create that bubble themselves, and we come up with a little pin to pop that bubble. So, doing that from a market and product perspective is really the foundation of getting into the accelerator. And also have, they also do a lot of stuff that they build their community, they start to build their network. they come in like significantly lower risk for us and lower risk for other investors. So it becomes a no-brainer. And then beyond that, we also look in the broader Bitcoin ecosystem and the broader Stacks ecosystem, even at teams that don't do the pre-accelerator, though, like doing the pre-accelerator gives you a huge advantage. And we do a fast track decision for those companies. We work more with them. I'm in the pre-accelerator speaking, several times a month throughout the program. And then, we get deal flow from our mentor network. So we have a very big mentor network of executives, founders, investors from around the Web3 ecosystem. The Stacks ecosystem has had some of the best investors in the entire space, Union Square Ventures, Y Combinator, digital currency groups, sort of like you name it in the crypto space. The best of the best have a stake in Stacks. And so we have the benefit of being able to work with those people through existing relationships and bring them in to meet our founders, to give pitch feedback. Throughout our program, like we have kind of like a similar to Abrams, like a 1 month initiation kind of process where we have a lot of educational content around like the legal structure for setting up your crypto entity, because you don't want to set it up, and you want to set up in a decentralized way to comply with securities regulations and things like that, and protect yourself and your investors. We have the Hiro team come in and do some different tech boot camps on like the different tools that they offer. And then after the first month, it's really just a new investor comes in every day. A new investor comes in every day. And Andy, you've done these sessions where the founders, they give their elevator pitch. And the interesting thing is that as a founder, pitching your own business is one of the hardest things to do. Like as being the running the accelerator, it's so easy for me to pitch someone else's business. But if I were in their shoes, it would be so difficult because I would be in the middle of it, immersed in it, to where it's like I'm looking at 1,000 things at once. Whereas being on the outside, I can just they can just push all that. I can just pluck the good parts and be like, pitch it this way, and then we help kind of then test that and use the lean method on their pitch to test that with all the VCs that come in and help them get 50 meetings, in 2 months, which would be very, very difficult to do on your own and take a lot of time and effort. But we kind of just do it for you on autopilot to help you dramatically accelerate your momentum in fundraising and increase your chances at being successful.
Yeah, makes sense. So it sounds like the pre-accelerator is kind of like this building stage, and then the accelerator is more of a consolidation and really, growth and fundraising stage. Maybe just step back a second, for the entrepreneurs on this call thinking about joining, maybe can you just say a few words, either of you, about the broader Stacks ecosystem? If folks aren't already in it, why join it? What's the benefit, outside of just the pre-accelerator and accelerator themselves?
Yeah, Albert, you want to go first?
Sure. I think there are a few points. I mean, when I was thinking about when Trevor reached out to me last year, I was like, am I supposed to go to Stacks, or am I supposed to go to another more mature blockchain, right? And I have the fortune of knowing a lot of investors that invested in these Binance and other now very established blockchains, but they invested in the seed angel stage. And so, of course, they all had their opinions. But in the end, I came to Stacks because I looked at a few things. One is just the hard numbers. And number two is about the community. Okay, so the hard numbers is this. There's tens of thousands of apps being built on Ethereum or Ethereum type chains. Right now on Stacks, we have 75. If you add up all the big, it's like in the hundreds, right? So that's only 1% of where Ethereum is. But the market cap or value of Bitcoin is so much bigger, right? So we have 99% to grow to catch up. And then the sky's the limit after that. So if we compare Ethereum to, like, say, the US, or Ethereum and Bitcoin to the wild, wild west of the US, Ethereum is sort of like the East Coast. It's there. It has its like value, is there to stay. But Bitcoin is like, going west. It's a land grab right now. It's a land grab, right? This is San Francisco before it was like started being mined, right? So it's massive land grab. So that's one. Like, as an entrepreneur, you definitely go to the biggest ocean with the least competitors. right? Right. So that's low-hanging fruit, no brainer there. The second thing is the community, right? And there's two parts of the community. One is the vision about, like, what if we can really create user-owned internet? Right? What if we could really realize Web3 on Bitcoin? Wow, how great would that be, right? But the vision without the right people is just a dream. It's just a pipe dream, right? But we have we have all the people here. Trevor introduced me to the people, and I was like, oh wow, it seems like everyone's very positive, very supportive. And after I ran this cohort, it started in March. We're in October now. I had the fortunate chance to meet over 50 existing builders, entrepreneurs on Stacks. We brought in 25 teams, and all the other people who were helping at the foundation, other types of roles. All in all, I think I've talked about 200 new people building on Stacks in the last about 6 months, right? And it was just my mind was blown at how supportive everyone is. And that's also part of entrepreneurship. It's sort of like when you trip and fall by yourself, it's going to take you a long time to get up. But if you trip and fall in a family, they'll pick you back up real fast, as you will pick them up real fast, right? And so it's very you make a mistake, it's okay, because it's a very tight knit community, and that momentum carries you. Right? Yeah. On top of being like a big ocean with very little competitors.
Sounds like a very collaborative environment, which a lot of entrepreneurs kind of are lacking and are looking for. Yeah. I think maybe we're running out of time, but maybe Trevor, if you want to take a last question of the folks who are listening today who want to get involved, who maybe don't make the cut, let's say, to this ultra exclusive labs and accelerator. There are going to be hundreds of teams, but not thousands. How can they be involved? And to the wider ecosystem, how are you looking them to collaborate with these entrepreneurs as well?
Yeah, absolutely, Andy. So I just want to add to Albert's point. I've never worked in a community of smarter, more competent, and more positive, like forward-looking people than the Stacks community. So I couldn't, the technology is amazing. It really is levels ahead, and if I look at what's happening in the environment between Ethereum moving to proof of stake, I think a lot of the other chains that are already proof of stake are going to struggle, but there will be a competitor to Ethereum on top of that's leveraging Bitcoin on top of Bitcoin, and Stacks is just leading the way on that. And we're very, very early. So if you like the sound of this, you're listening to this as an entrepreneur, you like the sound of this, come talk to us, come engage us, come get involved in the community, come to our events, reach out to any of the founders that you see in our portfolio. Even if you don't get accepted to the accelerator or pre-accelerator, we are always going to take the time to the extent that we can to give you feedback, to engage with what you're doing. If you're making a genuine effort to be involved, we want to, my job, Albert's job, is to help as many builders as we can. And so, just come and get involved in the community, and I'm guarantee you won't be disappointed.
Yeah, I'd like to sort of echo that. That truly is correct. And Trevor, my job, all our team's job is to help everyone. And on that point, Trevor and I, we've created a new system. So even if you don't get the fast track into the pre-accelerator, the startup lab, and the Stacks Ventures accelerator, you still are guaranteed to become part of a private Discord channel where you can find co-founder, and we'll give you self-training materials, step-by-step materials on how to do it. Right.
Yeah, really cool.
right. In a safe environment. And then when you're ready, then we fast track you. Right. Yeah. So we're not going to leave anybody down. And that's our guarantee.
Let's make that link available here, because I'm sure a lot of entrepreneurs want to get involved with that. And I'd like to get involved with that as well. So I think our time's up today. But Trevor, Albert, that was a great discussion. I think a lot of entrepreneurs are going to be coming your way. And I'm excited to be involved as well. So till next time.
Thank you, Andy.
Thanks, Andy.
Our link is thank you, Trevor. Thank you, Andy. If you want to get involved and apply and join this amazing initiative, is at Web3 Startup Lab. That's our Twitter, at Web3 Startup Lab. Thank you.
Very cool. Thanks, everybody, for joining. Till next time.
Thank you, guys.
Thank you so much, Andy, Albert, and Trevor as well. To all those that listen, again, make sure you do check out the Web3 Startup Lab and, of course, the Stacks Ventures Accelerator program. We would love to have you a part of any of those programs as well. And a big thank you again to today's sponsors and producers of Bitcoin Unleashed. The producers, shout out to the Stacks Foundation and also to our sponsors, Hiro, Xverse, Citycoins, Spread, Damon, Mechanism, and Fungible Systems. With that said, ladies and gentlemen, it is time to talk about subnets. We have heard so much about what was formerly known as hyperchains, now today known as subnets, this exciting technology that is coming with the Stacks 2.1 upgrade. I'm going to turn it over to Joseph to continue the conversation. Joseph, the floor is yours.
Hey there, everybody. So good to be here today. I'm Joe Bender, a community manager over at Hiro, doing everything I can to empower you amazing people, you amazing builders out there in the audience, building on Stacks. It's a beautiful sunny Friday here in Brooklyn after a couple of days of post-hurricane maelstrom out there. So I'm happy, I'm here, I'm ready to talk subnets. Thrilled to be at another Bitcoin Unleashed. Miami was literally my favorite moment in the history of Stacks. The excitement of the ecosystem was exploding. It was evident that the right people were flocking to Stacks, you know, the creatives, the builders, the big thinkers. So we move forward with the builders edition of Bitcoin Unleashed. And I am here today I'm honored to be here today with Sarala, one of the brains behind the engineering team working on subnets. Wow, Sarala, the last time we spoke was a couple months ago. Safe to say you had a busy summer hacking behind the keyboard. Why don't you say hello, give us a brief intro, and maybe what we'll be talking about today.
The honor is all mine, Joe, and happy birthday, and thanks for spending this time with us. And yes, sunny indeed. I'm Director of Engineering here at Hiro, and I work with some really brilliant people here. I love building on Stacks, helping our developers and enhancing their experience here while they're using our products at Hiro. And I love the community. I also love Fridays and love Rings of Power, no matter what the naysayers are saying at the moment. So thrilled to discuss all things subnets. It's been a busy summer indeed. Just to recap, you've heard hyperchains transition to subnets. We have an NFT use case live on testnet. We've been harping about that quite a bit. But here, we are here to talk about three main things. The performance expectations that you would like to see and we want to see on subnets and what we have done in terms of benchmarking and improvements, the present and future roadmaps, and how you all can help us as developers going forward for subnets.
Amazing. Thanks for the introduction. Good to hear. Hashtag Team Galadriel. So sounds like subnets are a huge deal. Scalability is always an uphill battle for each and every blockchain network out there. But we think subnets is a great Goldilocks compromise of scalability and security. So tell us a little bit about those benchmarks and performance you were talking about.
Yeah, just to take a step back even before we talk about performance benchmarking, right now, we are in a fully trusted federated model of subnets, or flavor of subnets, as I like to call it, which is based on a BFT protocol. So miners are responsible for issuing subnet blocks, users then validate, but subnet miners control the withdrawals. That's the gist of it. Improving performance on this BFT-based protocol, the expectations are really, really high. So drum roll, based on our initial performance benchmarking and some optimizations that we've done, we are able to see up to 10K transactions that will be packed per block. So that is 100K transactions for every 10 blocks. And we are also expecting around 15 seconds of block confirmation times if there are no pending transactions. So that's a huge improvement from what we are seeing currently on L1, where we see a few hundreds of transactions being packed per block. And here's how we've done that. It included two big changes. One is around the mempool optimizations. which thereby include database optimizations and how we query fee rates in the mempool. So huge shout out to the blockchain team, especially Greg and Bryce, who've been working on this. And then the second leg of it is more related to the MARF changes. So to recap, right now we have MARF on layer 1, but we don't really need that on subnets because subnets don't allow forks. So we are able to take the current implementation of MARF as it stands and move it to a more key value structured implementation using a SQLite database. So these key value updates with each new block, and those values will be stored in the database. Together with these two changes, that's the mempool optimizations and the MARF optimizations, are leading to huge improvements that I mentioned there. And the team are busy wrapping up some of the loose ends around both of these and will be available on testnet post 2.1 code complete.
My gosh, I love it. Improvements, scalability improvements. Great to hear about like some of the under the hood feature additions there. Some glossary for those blockchain beginners out there. BFT is Byzantine fault tolerance. It's how nodes are kind of communicating to each other. It talks about the Byzantine generals problem, where if two generals are planning to attack a city, but it's pre-internet, pre-telephones, how do they signal to each other, yo, it's time to attack? That's kind of the whole problem blockchains are tackling. How do two nodes talk to each other and trust what each other are saying? The other thing you said there was MARF. No, that isn't a weird way a dog barks. A MARF is actually a Merkleized adaptive radix forest, which is kind of a data structure tree that constitutes commitments to the blockchain and legitimizes a certain branch. So a lot going on there with subnets. Yes, technology sounds amazing, but how do we use it? What kind of products will be supporting subnets and subnets will plug into, so to speak?
First of all, thanks for demystifying all the jargon that I'm throwing at people. Really appreciate that. Yes, so currently the team are working on 2.1, which is very mission critical for subnets. So the withdrawals on subnets, for example, are dependent on 2.1 features. The multi-party contracts, the multi-party signers are both contingent on 2.1 changes for signing. So subnet support spawns across our products. That includes our API. Now, API needs support for these deposits and withdrawals that we've talked about. So deposit is when you submit a request or transfer a token, NFT, or your funds from L1 to a subnet. And withdrawal is when you're doing the reverse, when you are moving back your NFT or your funds back from L2 to L1 via the subnet's contract. So API needs support. So we're adding new handlers to deposit for deposits and withdrawals, and a new endpoint for querying pending withdrawals to be able to retrieve at what height the withdrawal is happening or the proof information for that withdrawal. And these need to pass to the contract. So that's on the API side. Now moving to a layer next to it is Stacks.js, where we're adding helper methods or structures to Stacks.js to ease this integration into subnets. So creating the transactions already is possible in Stacks.js today. So there's no additional support that is needed from Stacks.js there. But we're adding some really nice to have helpers that might help developers to really deal with these withdrawals and deposits easily. So that's two. And the third one is around Clarinet, which is at the center of getting started with subnets, spinning up a subnet miner, testing your contracts on a subnet. So now you can spin up your own subnet node and get an early feel of this component using Clarinet Integrate. We are very close to releasing Clarinet 1.0, counting hours almost. So with that, you'll be able to run Clarinet Integrate and spin up a subnets node and tinker with it and debug it.
All right. I'm following you. You could use a subnet for some compartmentalized functionality. Let's say a big NFT mint is going down and you want to have faster throughput to get mints through. Perfect. There's also a great tutorial that Hiro happened to put out where you're taking an NFT, you're minting it on an L1, transferring it to the subnet, doing things with it, and then you withdraw it back to the L1. Pretty logical. It happens just as other blockchain transactions happen, and that subnet is controlled by its own dedicated smart contract that's kind of telling it what to do. So another big development on the horizon is the launch of Stacks 2.1. A lot of talk about it, a lot of advisory boards and committees coming together. The whole engineering talent of the community is coming together to think, what improvements can we make? What does Stacks need? What love does Stacks need right now? So how do subnets and Stacks 2.1 play nice together? I guess, what are the plans for upcoming development, and just how does it tie into the eventual launch of Stacks 2.1?
Yeah, so Stacks 2.1, like I mentioned, is super mission critical for withdrawals to work on subnets. Right now, we're focusing the wider blockchain engineering teams across the ecosystem are focused on code complete for 2.1. There are multiple phases for testnet availability, etc. So soon after code complete, once the public testnet is available, people will be able to use 2.1 and subnets together and Clarinet integrate to start tinkering around, spinning up their own subnets, writing a subnet contract, piggybacking on what the use case that you just mentioned. So there's a lot happening in that space. Post 2.1, however, we have a very exciting roadmap that I'm very thrilled to share, actually. There's two main streams that the team are focused on in terms of subnets features after the NFT use case. One is rollups, and you've probably heard the term rollups quite a bit, and I will try to demystify that a little bit. And then two is around abstraction and having different flavors of subnets. I believe a multiverse of subnets will evolve, and different flavors of subnets would mean different flavors of VMs of those subnets, different consensus protocols within each of those subnets. So very exciting long-term plan for subnets evolution. So first, on the rollups, right now we are at a fully trusted federated model of BFT consensus mechanism where users trust the miners who are running that subnet. So they give arbitrary control to those miners. However, believing in this decentralization that we all are fans of in the Bitcoin community as well as Stacks, the natural evolution is having a more decentralized flavor of those subnets, and that's where rollups come in. So optimistic rollups is our current focus, which provide alternative strategies for moving towards that decentralized version of subnets. So the principal aim of a rollup is to really reduce costs to economics of scale. And the subnets contract thereby needs to be extended into a more challenge response protocol for bad blocks, because now you're taking the fully trusted model and making it a more decentralized version. So for any bad blocks that are generated by this L2, now you want to have a more challenge response, move towards a more challenge response model. So the miners in the federation keep deposits in the subnet contract at all times. So this protocol will give the ability for any challenger to execute blocks by themselves and discover the invalidity of the chain state. So remember that subnets do not allow for forks. Having this model will allow for more decentralization to happen thereof. So that's one. Two, on the abstraction side, the Clarity VM as it stands today is the subnets as it stands today relies on Clarity VM and operates on that instruction language, and it cannot run smart contracts which are not Clarity specific. So we're building an abstraction layer, taking the public functions that are in the Clarity VM, so people can then implement those public functions and add their own flavors. So if you have an EVM that you really fancy, you can then implement those public functions and build an EVM-based subnet there. So this is a serious undertaking because a Clarity compiler as it stands today does not really allow for that. So building that abstraction layer will allow other entities in our ecosystem to then able to do what they want to do in terms of different VMs for those subnets. Think about support for other smart contracting languages like Solidity, which is now possible via this abstraction. I know that's a lot of information I threw at you. So just unpacking abstraction so you can have multiple flavors of VM, and rollups so you can scale and move towards a decentralized version of subnets. Yeah.
No, all right. I'm with you. Thanks for outlining some of the components of it there. It is a Herculean technical undertaking, but a very, very integral one when it comes to just operation and functionality of the blockchain. Hey, I loved fruit rollups as a kid. I'm sure I'll love optimistic rollups. Okay, so you kind of outlined it all there. If there's one thing that maybe you've been alluding to, and we certainly believe at Hiro, it's test, then test again, and then give it to someone else to test for you. So what's going down the next 6 months with subnets? I guess, how are you trying to gather feedback? How is it getting audited?
Yeah, there's a lot that needs to happen for mainnet readiness. So we plan to launch subnets on mainnet by Q1. For that, we need to test this thoroughly. We have a solid team of engineers, but the call to action for anyone listening, including developers and users, is to test the hell out of subnets as it stands today on testnet. Play around with the NFT use case, evaluate the performance numbers that I shared with you, which is 10K transactions per block and 15-second block confirmation times. So help us test that. And if you are an NFT marketplace, and if you are CryptoPunk or Megapont from those teams, or any new NFTs, we would love to see an NFT case study happen on testnet and evaluate these benchmarks and help us identify any bugs thereof. So Q1 is the date. Mark your calendars. Early Q1 is where we are hoping for subnets in mainnet to launch. So calling all developers immediately after 2.1 code complete, and when public testnet is available, help us test this. And one more thing, yes, as we are gearing up and relying on our community and our developers, we're also auditing subnets in behind the scenes, so we make sure that we don't ship this with vulnerabilities. So fingers crossed that will be on time for Q1.
Amazing. A lot of people will be looking forward to ski season. I will be looking forward to subnet season come January 2023. Amazing. You heard it here first, people. Testnet is ready. The gates are open. We need developers to stress test it in all different use cases, the NFT marketplaces, the DeFi swapping protocols, everything. We need to learn all the edge cases as well as all of the classic commonplace crypto operations. Do you have any closing thoughts for the audience, Sarala, before we hand it back over? Got just a couple minutes left.
Yeah, I'm very thrilled about subnets and the future it holds and how it'll evolve Stacks overall. As a team are also working on L1 changes that Muneeb mentioned. Give us time to test this. Test this with us. We're relying on your experience and on your feedback. So the key takeaways really that I want to leave with all of you are really three things. One is the performance. Expect 10K transactions packed per block and 15-second block confirmation times. Expect rollups and optimistic rollups and down the line zero knowledge proofs in the future roadmaps in 2023, and help us test this and launch your NFT marketplace here on subnets.
Amazing. Anything else?
No, that's it. It was a great conversation. Thank you. And over to you and Kyle.
Yeah, I mentioned that NFT tutorial. Dive into that. Spin up your own subnet node. It is there and ready to be experimented with. And we don't know unless you tell us. Feedback is a gift, they say. So absolutely critical. We want you to break things. We want you to stress test things. It takes a village to raise a blockchain. Thank you guys so much. Looking forward to Subnets on the horizon. Sarala, thank you for making time to bring your subject matter expertise from the hacker room in here to Bitcoin Unleashed. That's all we've got. Kyle, I'm handing it back to you. Thank you, everyone, for your time and attention.
Cheers.
A village indeed. And we've got one of the best groups and communities here within the Stacks ecosystem. Very excited again for Subnets and what's to come in early Q1 of 2023. That said, if you haven't done so already, make sure that you do check out the technical track, which you can switch between where we are on the builder track and then the technical track to get a further deep dive into Clarity, Clarinet as well. Also the Stacks 2.1 architecture and much more as well. That said, it is time to continue the conversation and let's talk a little bit about Clarity. Let's talk about choosing smart contracts language for your decentralized applications and future applications as well. With that said, Sami, the floor is yours.
Hey, Kyle, appreciate the introduction. My name is Sami Kassab. I'm a research analyst here with Messari. I specialize in Bitcoin as well as Web3 infrastructure. Today, I want to talk about smart contract programming languages. And so what we've seen in the past few weeks is two emerging high-performance L1s, Aptos and Sui, have generated quite a bit of buzz. And both these L1s use a new smart contract programming language known as Move. And this was originally developed by Facebook for the DM blockchain. And so Move has essentially just like reignited this debate over which smart contract language is the best. Today, I will be diving deeper into that conversation. I have with me a diverse group of panelists from different ecosystems, ranging from Kadena to Stacks to Moonbeam. And we're basically going to be discussing the pros and cons of their respective ecosystems programming language. So to get things started, I'd be pleased if everybody could please just introduce themselves, which ecosystem they're building in, and then just briefly mention which smart contract programming language they use. And we'll go ahead and start with you, Max.
Yeah, certainly. Max Efremov. I, at Hiro, support the builders and developers on the Stacks blockchain and Stacks ecosystem. The smart contract that I'm going to be talking about is Clarity. And before developer advocacy at Hiro, I was a machine learning engineer who also doubled as a crypto educator for both retail and a little bit of builders before I got into supporting developers.
Derek.
Hey, yeah, so I'm Derek Yu. I'm the CEO of PureStake, and we work on the project Moonbeam. So Moonbeam is built in the Polkadot ecosystem. It's a layer one smart contract platform that specializes in cross-chain use cases and scenarios. It's implemented in Rust and Substrate, but perhaps interesting and relevant to this discussion, it does offer a Solidity and EVM compatible developer environment. So maybe I'll represent that point of view on the panel today.
And Francesco.
Hey, everyone. Francesco, CEO of Kadena Eco, Kadena's ecosystem growth arm. We designed our own proof of work blockchain from the ground up to scale, and also our own smart contract language called Pact. And a fun fact for the Stacks Hiro fam out there, we were actually quoted as inspiration in your first white paper that came out back then.
Thanks, everybody, for the introductions. Go ahead, Max.
I was going to say, I did not know that. Thank you, Francesco. I'm learning already.
I think it was in the very first version. I'm talking like maybe 2019 or earlier.
So it sounds like we have a diverse group of programming languages. We have Clarity, Pact, and Rust. So one that we all know about is Solidity. And just to provide a little bit of background to potential viewers who might not know much about Solidity, Solidity was really the first widely used smart contract programming language. And it was built specifically to run Ethereum. And so essentially it was the first mover. And because of that, we've seen a large network effect created around Solidity. And a lot of newer layer ones, such as Polygon, Avalanche, and even Binance Smart Chain have added EVM compatibility because it makes it super easy to port over applications from Ethereum over to different ecosystems. So many people now believe that like smart contracts such as Move, Clarity, or Pact are the future of smart contract development. But there are some other people who might believe that there really isn't that much new functionality that's being added with these newer smart contract programming languages. And so the question I'll hand over to Francesco first, and then pass it over to you, Max, is what do you guys believe is either missing or inherently flawed in these existing popular smart contract languages such as Solidity and Rust?
Yeah, so Solidity I think was an awesome first attempt at setting up a language for the future of what's going to be smart contracts hosted on blockchains. And on that front, I think the main flaw with Solidity is it lets developers do too much. I think here in this conversation, at some point, we'll get caught up in, whether a language should be Turing complete, like Solidity, that lets you do everything under the sun, or something that's more Turing incomplete, like Pact and Clarity and other languages coming out. A way that I like to compare that is basically like with a Turing complete language, you can write some code where the surface area for bugs is pretty much the whole world. Whilst if you have something that's Turing complete, it's more like the surface area for a bug might be the size of a small room. And it's much easier to, go around and sweep and hoover up what's in a small room than keeping an account for what could possibly be out there in the whole world. So that's kind of our first view into why we went and built our own smart contract language from scratch, because it's certainly no easy feat.
Yeah, Max, would you agree with those flaws?
Yeah, that's exactly right. Solidity being the first smart contract programming language, its development was in advance of all of the incredibly useful knowledge that we came into after the innovation that we saw. With smart contract capable applications, decentralized finance, these things were all technically possible at the beginning, but it took years for them to be developed and innovated. And when Solidity was created, the different design principles that were applied, there's simply just no way of knowing what that world would look like. And the default was made towards, let's give the developers the possibility of creating more or less anything. In fact, who would even want to argue or make the case for limiting developers or kind of encumbering them in some way? What I would love to get into at some point is that Turing incomplete languages, also known as decidable languages, they may theoretically limit a developer and what it is that they're capable of doing. But pragmatically, practically speaking, there isn't actually very much Solidity functionality that we can't replicate if we decided. And the benefit is that a whole host of vulnerabilities are fundamentally impossible in a Turing incomplete language, making what we have discovered, these economic resources that are staggering in their value. The sums that are being hacked on a daily or weekly basis are, 7, 8, 9-figure sums. Those resources need to be as protected and secure as possible. And so that's what, those are some of the design principles that Pact and Clarity have made at kind of the center of the language design.
Great. Derek, Moonbeam is written in Rust, and so it's essentially Turing complete. How would you respond to what Max and Francesco have said? Would you widely agree with them, or how would you push back?
Yeah, so I would agree. I would say, and just for context, Moonbeam itself is implemented in Rust and using the Substrate framework, but it does offer this EVM compatible environment for developers. So that's the product basically that is being put to developers is this Ethereum and EVM compatible environment, much like you were mentioning Polygon, BNB Chain, and others. So it offers a similar approach. Security is the main, be the main criticism. I would agree with that. Solidity was designed in an era before a lot of these so these security threats and the amount of values at stake were kind of understood, what it was going to look like. I would actually add to the criticisms that throughput and concurrency is also like not something that was really part of the original design of the EVM itself. And so yes, while there's people have figured out clever optimizations and done things, it really is something that wasn't part of the original design. So those are major kind of drawbacks. Just to go to the other side, though, there are some major benefits, and you mentioned some of them in this portability. But for me, I would say that it's this kind of whole ecosystem of dev tooling and infrastructure. This stuff is like hard, and it takes like a long time to build, and it requires huge amounts of investment. And so by being EVM compatible, you kind of inherit like all of these tools. Even consider Moonbeam, there's an Etherscan deployment, there's Chainlink, there's just all these kind of tools and infrastructure that you kind of, I won't say you get them for free, but they're part of this whole ecosystem that's grown around the EVM. And that does help with dev adoption, right? In this world, dev adoption is kind of king. And so that's kind of some of the benefits is you kind of have this rich set of tools. Developers can kind of, they kind of feel like, a lot of their needs are taken care of, and you get this stuff almost for free when you implement into this Ethereum tech stack. The second thing I would say that is a big plus is compatibility. So even, when you're, for us, for example, at Moonbeam, we're specializing in these cross-chain use cases. Part of that means that we need to integrate with a lot of these new like interoperability networks. And being EVM compatible, I can tell you whenever you're talking about any like third party trying to integrate with you, you immediately, that's like a different discussion and like much easier than if you have a different tech stack implementation. So for us, that's Accelerator, Layer 0, Wormhole, and all of these other cross-chain messaging protocols that are implemented on Moonbeam. So that was given what we were trying to achieve, we knew that using this EVM compatible approach would make it easier for us to kind of execute on our strategy.
Great. So if I could, and just to add to Derek's point, if I may, Sami, yeah, it is totally the case that given the Solidity language's kind of pioneering status, the path dependence of developer resources and community is staggering, and that is maybe the single biggest drawback to adopting any non-Solidity language. And the way that I see it is that there's a drag force on Solidity-based smart contracts, and that drag force is the attack surface. And so in a way, the composability that you mentioned as being a benefit to the Solidity ecosystem and applications written on it, the open question for me is the benefit derived from the composability is kind of one vector that is also kind of competing in some sense against the vector of the increasing attack surface because of the like kind of faulty underlying nature of Solidity. And so for me, the question is these hacks and bugs and exploits seem to just monotonically increase. And at some point, will it just get to be unacceptable? And at that point, maybe the community, developer resources, the support, the kind of robustness of other languages and whatever other features their blockchains also provide, that might be finally a kind of straw that breaks the camel's back, and the adoption kind of hits. And then at that point, the network effect unwinds. So that's just how I see it, as this like attack surface, these two forces competing.
Yeah, that's an interesting point of view. I mean, I think I agree with this drag effect, right? That the security is something that seems to be increasing in I mean, we were talking about earlier before we hopped on here, right, about this BNB chain bridge event that just happened. I guess my view though is that it's not like a single threaded like evolution, but rather we're moving into this multi-chain kind of world where there's going to be different environments, different VMs that can specialize and specialize in serving different kinds of use cases better. And part of this like world, once you connect these different environments together, then I think there really is an opportunity to kind of have different environments serve different use cases, but then leverage, an app developer can leverage different like VMs, let's say, for different parts, different kinds of use cases. And then you have this whole is greater than some of its parts, opportunity to take things that the EVM does well in terms of compatibility, let's say, and interoperability, but maybe combine that with workloads or logic that's running, in a more specialized environment that offers different kind of security properties. And so that's kind of the world I see, where there's, going to be multiple different kinds of environments, and you'll be able to in the future potentially mix and match, which ones you use in service of the application you're building.
Yeah, and just to add to that too, I think we may need to zoom out a little bit and realize how early we are in terms of adoption. I understand that, of course, there's been hundreds of thousands of man hours gone into the tooling surrounding EVM and Solidity and, deploying and writing smart contracts and all of that. But I think the latest stats I saw were something like 5 or 10,000 Web3 devs. And obviously that number is going up, but, compare that to the number of full stack devs in the world, which is 20 million. There's definitely an opportunity to bring in that, the rest of the world, of the programming world into blockchain itself, and to doing that in a way that's innovative and more secure. The real question here is is Solidity, an early attempt at building a smart contract language? Is it, and everyone knows its faults and whatnot and all the trade-offs of doing it. And the real question is it more like something like PHP, or is it something like JavaScript that we're probably going to be stuck with for, foreseeable futures and potentially the rest of our lives?
Yeah, that's good. I kind of see it. This is my personal knowledge, is more like C programming language, where it allows a developer to make terrible mistakes, and a lot of the world security problems have arisen from misuse, in the C programming language. But nevertheless, it was this early thing. It kind of is at the base layer of a lot of things still, right? And then new languages come around. So Rust. We're using Rust, right, which improves upon. And kind of guards against a lot of the most common problems that you can shoot yourself in the foot with when it comes to C. But that doesn't mean that C didn't have a prominent place, an important part of the story of just the development of compute operating systems, all the rest of the tech stacks we work with.
Yeah, Derek. So it sounds like the desire to go with Rust was, the desire for EVM compatibility, the need to be interoperable in a multi-chain environment, and then, like you mentioned, able to have access to infrastructure that's already built out and to a larger developer pool. So the question I'll pose to Max and Francesco then is, what desired features led to the decision of, creating a new programming language over going with one of the existing ones? And so maybe you guys can quickly just touch on the need for being Turing incomplete and having a decidable programming language, and then maybe also the benefit of having human readable code. So if you can quickly touch on those, we have a few minutes left. I'd love to hear more about that.
Yeah, sure. Briefly, it would be something like a decidable language gives you a special kind of simplicity when it comes to reasoning and analyzing your contract and the call graph. So the other contracts that your contract will kind of interact with. There's no recursion possible. There's no conditional jumping. And so you get this nice effect of being able to see exactly what will happen deterministically, and just reason and analyze about the code a lot more. Also providing, by the way, precise gas estimation, because you actually know how much this is going to cost. Also, it is really designed with security in mind, and that means imposing a number of defaults that the developer has to opt out of explicitly. So you'll see this throughout different code. It's a little bit more explicit because of various defaults that, when again, kind of given some of the latitude that programmers, developers have in Solidity, they just wind up being sources of bugs. And then lastly, last two things, interpreted, meaning the source code is published directly to the blockchain. We're not introducing any compiler bugs, and also you can see the code directly on the blockchain. And then lastly, anchored to Bitcoin. This is Stacks has native insight and read capacity into Bitcoin state, and we find that useful for creating all sorts of applications. Not to mention, our state exists therefore on the Bitcoin blockchain, and it's decentralized and the most secure.
Awesome. Thanks, Max.
Anything in addition to add to that, Francesco?
No, totally. So agreeing to all the above, and Pax implemented pretty much all of that, apart from obviously the Bitcoin side of things. On top of that, because as a decidable language, like Max was saying, we're able to also build formal verification into Pact, which means it really closes any sort of bug surface for doing any bad math, or even extends to things such as people that shouldn't be writing to a database. And just covering those two things, I think, covers sort of the vast majority of the bugs that we've seen recently in Solidity.
Great. Well, looks like we're out of time. Time really flies by so fast when you're up here. I came with like 10 questions. We only got to about 3 of them, but nonetheless, it was great getting a chance to chat with you guys. It was a pleasure, and thank you for being here. I'll go ahead and pass it back to Kyle. Thanks, everyone.
Thank you, everyone, and Sami as well. What a great panel discussion about the future of smart contracts. Next up, we're going to shift gears into a very exciting topic and category we speak about a lot here in the Stacks ecosystem, and that is decentralized finance. I want to welcome up our next panel and talk a little bit about the humble Degens and using native Bitcoin in Stacks DeFi. With that said, Tycho, the floor is yours.
Right. Hello, everybody. This is definitely the right place you've joined this morning or afternoon or evening, wherever you might be. But yeah, we're going to be talking about Bitcoin DeFi, and yeah, that's going to be very, very exciting. And we're here with Hadan from Alex and with Aki from DLC.link. So yeah, my name is Tycho. I'm a general manager at Trust Machines, where we're building the largest application of Bitcoin, or the largest ecosystem of Bitcoin applications. And next to that, I'm also co-founder of Zest Protocol, which will offer on-chain Bitcoin yields to Bitcoin holders and under-collateralized loans to institutions. So very much into the whole Bitcoin DeFi space. And yeah, I mean, really, bear markets are for building, right? That's why you're also all here, right? That's why Hadan is here. That's why Aki is here. That's why all of you in the audience are here. And yeah, we're really excited about giving some sort of impression what it's like being in the trenches, building stuff, and also what's likely going to be possible, right, a year from now. Because when building, you want to be early, you want to be in the right community. That's going to build the technology that you want to use to make your use case possible. And yeah, that's really what we want to zoom into today. And yeah, I'll be kind of moderating this session. So yeah, really excited to hear from Hadan and Aki. But maybe first, Hadan, do you want to briefly introduce yourself and what you work on, Alex, before we dive a little bit deeper into that in a second?
Sure. So Tycho, Aki, it's a pleasure to share this panel with you both. My name is Hadan with the Alex Lab Foundation Growth Team. My background is I did my undergrad studies in physics at Harvard. Then I joined Goldman Sachs as a fixed income trader on the LATAM currency and structured products desk. That's how I met our co-founder Chanda Shu, and that's how, like a lot of other team members, I came to gradually be disillusioned with traditional finance. Having witnessed early on in my career the 2008 crisis due to information, a lack of transparency, information asymmetry, over-leveraging by banks, and not knowing who owed what to whom, which ultimately required a federal bailout. And it was really the general public that suffered the most, with people losing their jobs and their houses. And so that implanted in me a sense that there had to be a better way. And that's what led me towards Bitcoin and blockchain, that we now have a superior technology, thanks to Satoshi, to go from trusted to trustless systems. As for Alex, we are a DeFi protocol with all transactions settled on Bitcoin. Alex currently provides an AMM DEX, an IDO launchpad, yield farming, and borrow land with more features to come. We want to position ourselves as the financial hub of Stacks. Our DEX has the deepest liquidity on Stacks. That's where Stacks users can come to most efficiently swap their tokens. We've also partnered with projects like Gamma so that their backend uses our API, enabling NFTs to be purchased, not just with Stacks, but also with XBTC XUSD, and any other Alex listed token. Our IDO Launchpad connects emerging Stacks projects with our core users that have a track record of staking and yield farming, which benefits not only new projects by connecting them with the ideal token holders, but also rewards our long-term holders by giving them exclusive access to these new projects.
Yep.
Amazing. Great stuff. And Aki, I guess now over to you. Can you briefly introduce yourself and what you guys are working on?
Yeah, just to jump in. Yeah, Aki Balogh, entrepreneur. I've been in data, AI, machine learning for 10 years, built a company in the content marketing space over 8 years. And 2 years ago, started looking at crypto, and I basically left to build another product. I want to build products that help move society along, and building on Bitcoin was absolutely, the best way to do that. So essentially, we're implementing an invention that came out of MIT 4 years ago. It was created by Taj, who co-created the Lightning Network, called discrete log contracts. And what DLCs let you do is they let you lock Bitcoin into escrow in your wallet and use it in DeFi in a more secure way. So you don't have to bridge it or send it to a custodian like Wrap Bitcoin to use it. So it's a very high impact technology. And we're building a platform that enables app developers to more easily integrate it. And basically all the kind of smart contracts, the Oracle system, Bitcoin Oracle system, wallet libraries, just all the components you need to be able to use native Bitcoin in your application. Lots of use cases. Well, one big use case for this is the use of Bitcoin as collateral in lending. But some of the other use cases that Stacks, Stacks is really an ideal place, to utilize native Bitcoin directly from wallets, because you really use it to do kind of auction bids and kind of Kickstarter campaign, any kind of conditional payment where Bitcoin would be moved based on Bitcoin Oracle or sort of data feed from an external provider, can be built. So it really opens up a universe of applications for Stacks developers.
Yeah, amazing. That's. I can definitely say that I'm also very, very excited about the potential of DLCs and being able to integrate more natively, because it's actually technology that's been around for a while, but like you actually need all these different components around it, right, to actually be able to use it. So that's some really exciting work that you guys are doing. And maybe before sort of cycling into like what a future could look like with more native Bitcoin integrations. Maybe curious, Hadan, if you could maybe shine some light on like what kind of what are you using now, right? And what is the sort of Alex community using now in terms of like Bitcoin integrations on Stacks, and then from there we can kind of look at what that might look like in the future. What does the experience look like today?
Sure. So currently, Alex does use wrap tokens such as XBTC and XUSD. XBTC is wrapped with TokenSoft as our tech partner and Anchorage as custodian. XUSD is also wrapped by TokenSoft, but with a multi-signature contract on Ethereum. The drawback of wrapped custodial tokens like XBTC is that you do take on custody centralization risk. So we see XBTC as an intermediate solution as we work to provide our community with several options. As a custodial solution, there is XBTC. A non-custodial decentralized solution would be something like Magic Bridge, which we hopefully see the liquidity increase. What Aki is building through DLC and Bitcoin escrow contracts looks extremely promising as well. And we're open to all these solutions. And collectively, I think we're all awaiting a protocol native decentralized Bitcoin. Because after all, Stacks is a sovereign chain. And so accessing something that is outside itself is contradictory. Stacks can read Bitcoin state, but it presently cannot write to it. So what we need to focus on is really what we mean by native, or more precisely, what it is that we want to achieve when we say native access compared to non-native solutions. In reality, we are really mostly talking about custody centralization risk, i.e. not having to part with your Bitcoin before being able to use it. So by native, we are really talking about having a trustless, decentralized version of Bitcoin on Stacks, one that doesn't change the ownership. And Stacks, I believe, is in a unique position. It is the best L1 and likely the only L1 with the potential to realize that due to its unique relationship to the Bitcoin blockchain through proof of transfer. And I don't think it's just theoretical. As Muneeb has said, that the brilliant minds of Stacks are working on solving the Bitcoin right problem, i.e. fully trustless Bitcoin with the peg in, peg out, and Stacks contracts writing to the BTC chain. And I believe in our ecosystem, we are making very good progress to solve the Bitcoin right problem with a view towards building not just a trustless BTC peg in, peg out, which we hope to see more announcements on the progress that's being made in the weeks to come. At the moment, until such a solution exists, we continue seeing demand for XBTC. And again, we're always open to providing more options, more solutions, and working with new teams and what they want to bring to the Stacks ecosystem with things like DLC.link and other decentralization options.
Yeah, no, that's great. That's great stuff. That's a fantastic summary, right? So there's currently this XBTC, right, which is backed 1-to-1 or more than 1-to-1 by Bitcoin held in Anchorage, right, which is like a very, very safe custodian. But of course, it introduces this kind of, it does introduce a trusted element, right? And then it's like, how can we move, from this sort of first, stopgap to the future from there. Right. And yeah, then there are interesting things possible, today or soon with Magic, where you can trustlessly swap, right? You can leverage that. Read access to Bitcoin state that Stacks has, and that the blocks are produced at the same time. But there's much more possible and much more that's being worked on. So Aki, like what is sort of your, if assuming of course you guys are going to be very, very successful, what does the world look like one year from now?
Yeah, absolutely. We're working hard to get the first prototype out by the end of the year. We're partnering with a Stacks lender called Arcadico to have an actual DLC implementation where users can just deposit their native Bitcoin and without having to send it or swap it, or without, frankly, triggering a taxable event by moving it. So we anticipate that will be quite exciting. Once that is live, and kind of in parallel, we're working with as many teams as possible to just test the various ways of using this. We do feel that there's a tremendous UX advantage to using DLCs as well, because it really cuts out a lot of steps from the user's interaction. Frankly, a lot of Bitcoin users, think of El Salvador or other countries where they're using Bitcoin to, various ways, or using it as store of value. A lot of people are not engineers, so they don't want to do kind of an 8-step flow and swap to different places and incur, risks. And they are, very terrified when bridges get hacked as well, such as the one this week and the one practically every month these days. So the ability to just lock it in, sign a contract in their wallet, lock in and just use that Bitcoin in other applications is tremendous. Basically, we're just looking to unlock that for as many use cases as possible. It really, DLCs, we see a lot of potential, but it really is best thought of as a front end to really powerful, applications. So it really, if we solve that kind of initial on-ramp or usability challenge in a safer, more decentralized way, that will be success for us. But some of the other items on our roadmap, basically 2 innovations. One is the use of DLCs on Lightning. There's some interesting thoughts around Lightning escrow, but it hasn't been fleshed out yet. So that'll be on our roadmap for next year. And then the other is right now DLCs are completely non-fungible. When you lock into an escrow, you're not transferring the escrow to other places. And there are some ideas. We're working with the Bitcoin community to think through what could it be, what could it look like if it were fungible, and what would that unlock, potentially using state chains or, other solutions. So those are some of our kind of more, maybe more speculative ideas for next year. But right now we're just trying trying to make it work on the first couple of applications. And the good thing about it is because the math has been done and the DLC white paper has been out there for years, so it is very cryptographically secure and it is guaranteed an orders of magnitude safer than sort of the alternatives that are in use today, billions of dollars transacting in various unsafe ways. So we're really passionate about making this happen.
And what, in very short, what is a DLC?
Yes, so DLC is a 2 of 3 multi-sig. So it's an agreement between a party and a counterparty where there's an independent Oracle network that also kind of monitors the outcome. And so we call that a Bitcoin Oracle because it allows a data feed to conditionally move Bitcoin. So it's basically a 2 or 3 multi-sig tech. And it eliminates counterparty risk. So when you use 100% escrow to, in a financial transaction, it eliminates counterparty risk. And we are building systems that trust minimize or eliminate as much, custodian risk and as possible. So it really, it really opens up a lot of just another layer of decentralization on top of native Bitcoin without having to have a smart contract specifically run on Bitcoin. It enables an arrangement or an agreement between a user and an application that is governed, that the application is governed by a smart contract. So it just kind of opens another layer there.
Yeah, that's and that's also one of the things I think is a really interesting sort of potential of stacks, right? Because we have the read access to Bitcoin state. Someone could move Bitcoin into a DLC, could check from a Clarity contract that that's happened, and then execute from there, of course, making sure that there is a reliable Oracle network that of course you guys are working on. But yeah, that's really how these things interlock or interlink, and all that innovation can sort of live off each other in a great way. So Hadan, like what kind of, having spoken about DLCs for a little bit, what are sort of some of the use cases that you see for the kind of Alex community to leverage?
Sure. And so we're at work, building, as you say, bear markets are for building. We're currently at work on a wrap bridge that is connecting XUSD on Stacks with USDC on Ethereum. And the bridge testnet, we're looking to start soon, within 1 to 2 weeks. Our order book testnet is currently live. And the next step of that will be our order book mainnet, which we're aiming to have hopefully by the end of the month. Following order book, we're working on Stacks lending. This will enable users to receive a leveraged Stacks yield, which we think the community will find very exciting to have the opportunity to earn, say, a 10x Stacks yield. Also in the future, we'll be offering stable swaps, which are swaps between stable coins. This benefits the ecosystems, as swaps between stable coins have very low slippage. And as an LP provider, you can earn trading fees with a minimal and permanent loss risk. Our ultimate goal, however, is to transform Bitcoin into a yield-producing asset. And Stacks is really unique as the only blockchain where supporters earn a native Bitcoin yield. And I think it's important to underline, especially with this crypto winter, with all the Ponzi-nomics that we've seen, how unique Stacks yield is, because it just doesn't come out of thin air. It's a yield that comes directly from the activity on the Stacks network. So it's non-inflationary, and it is quite remarkable in that way. And so, of course, Bitcoiners would love to earn more Bitcoin, but they don't necessarily want to take the exchange rate risk of holding Stacks. So this is where Alex will provide a DeFi solution with an intuitive user interface where, through a smart contract, it will handle the conversion of Bitcoin to Stacks. It will hedge out the exchange rate risk between Stacks and Bitcoin. It will return the Bitcoin yield from stacking, and at maturity, it will return your Bitcoin principal. Bitcoin will then be more than just a store of value. It can be put to work earning a yield from the growing activity on Stacks. This is a win-win for Bitcoin and for Stacks. And in fact, I like to think of it as the dawn of the Bitcoin economy. Although, of course, to fully realize this vision, it does require DeFi with trustless BTC, which is what we're sort of like all working towards in the waiting. And towards Alki and DLC.link, I think it's an extremely interesting idea with many applications. I think that the Bitcoin escrow contracts could provide a more decentralized alternative to XBTC. And as soon as those escrow solutions go live on Stacks mainnet, we want to be among the first to introduce it to our community through AMM pools, et cetera. If our community could build services incorporating such escrow solutions on Alex, that would be even better. We know that a lot of people are looking towards DLC Bitcoin contracts. We hope to see some live examples of its use on Stacks soon. That'll give us an idea of how it may work with Alex. And if there are any community-led initiatives that uses, say, DLC.link to build on Alex, we are very supportive of that. So please reach out to us, let us know, and you'll have the full backing of the Alex team and support.
Yeah, that's really, really cool. And what I'm hearing is mainly, you can do Bitcoin as collateral potentially in a DLC, right? That's like, it could be an interesting use case for Alex. It's like the perps stuff that you're working on. So I guess those are some maybe immediate things to think of, or for builders to contribute to. So we have about 1 minute left. There's a lot of amazing activity in the chat, so people are really excited here. And there was one question about Lightning and DLCs, and it is now has disappeared. Oh, there we go. And also how that potentially compares with stablecoin activities on Lightning. I'm not sure if you, Aki, want to give a sort of 10-second thoughts of DLCs and Lightning and how they are maybe similar or not.
Yes, well, we're not, from a technical standpoint, I'm not comfortable digging into it yet because we ourselves haven't looked into deep enough to really understand. But conceptually, it seems quite powerful because with DLCs, you're still moving Bitcoin, which does not make it great for very transactional use cases. So because of gas and so on, so extending that to Lightning would be a huge win. So that'll be next year for us.
Brilliant, fantastic. And then time is up, so I'm going to hand it back to Kyle for the next exciting chats that are going to happen during this Bitcoin Unleashed. And until next time, guys.
All right, thank you, Tycho. Thank you, Aki.
Thank you very much.
Thank you, everyone. By the way, if you haven't done so already, make sure you're checking out the technical track as well. There's a ton of conversations going on right now, again, around Clarity and Clarinet, also the Stacks 2.1 architecture. And if you're looking to build applications, there is a ton of conversations and walkthroughs sessions over on that side as well. That said, we're going to go ahead and move on to our next conversation, which is all about lowering the barrier to decentralized mining pools with Stacks 2.1. Maddie Stacks, the floor is yours.
Hey, everybody. Sorry about that delay. I'm Matty Stacks here. We went from humble Degens to anon Degens, and that threw a little spanner in the works, but good to be here. I'm here with Codex BTC and Bowtied Muneeb. Just want to briefly give an introduction of myself and then ask Bowtied and Codex to each do that before we dive into the topic at hand, which is stacks mining and making that more decentralized and how 2.1 plays into that. Like I said, Matty Stacks here, tokenomics resident at the Stacks Foundation, have done a lot of work and modeling on stacks mining itself, on proof of transfer, on potential upgrades and changes that can be made to improve it, and actually have published some materials, some reports that you can find on Twitter. We'll talk about some of them today, actually working on a Q3 mining report as we speak, that go into a lot of the details of stacks mining. So that's my background. Before we get into the content though, Codex BTC, did you want to give a brief background of yourself?
Yeah, absolutely. Thanks, Matty. I'm Codex, and I'm an independent researcher and software engineer. And yeah, I've been involved in the Stacks ecosystem for now over a year. And yeah, I follow interesting technical stuff. Very short.
Awesome. And Bowtied Muneeb, not to be mistaken with Muneeb, obviously.
Thanks, Matt. Hi, I'm Bowtied Muneeb. I am the co-founder and CEO of Cyvita Mining. We started mining city coins last August, I believe it was. So it's been over a year now. And yeah, general blockchain enthusiast and a non-degen as well. So glad to be here.
Awesome. Well, thanks, guys. So let's get right into it. You know, the state of stacks mining over the last year or so, there's been about, on average, 7 or 8 miners each block, on average, that is. Recently, it's kind of been a bit lower, more like 5 or 6. As many people on this event today have mentioned, stacks is special in that it's proof of transfer consensus mechanism. But I think a lot of people are interested in how that number of miners can be increased so that decentralization and security of the chain can be increased overall. And obviously, things like non-custodial mining pools are coming in the future, but not currently available. From the point of view of a miner, maybe Bowtied Muneeb, you'd be great to speak about this a bit. What are some of the hurdles to mining stacks? Why aren't more miners showing up if it has been, as it historically has been, profitable to mine stacks?
Yeah, I think for starters, the documentation and like actually setting up a miner is pretty technically challenging. You kind of have to do it on a Linux machine. So, I come from a Fortune 500 company, and I'd always worked with Windows, right? So figuring out how to actually get a miner set up alone is challenging enough. And then it's a really large capital commitment. I remember when we did this analysis, Matty, back in January of this year, I remember it being like 2.5 Bitcoin that you needed to minimize volatility enough over like 500 blocks to not really worry about losing a significant amount of capital. Now, because stacks prices come down relative to Bitcoin since then, that number is probably quite a bit lower, but you're still probably talking about 20 or 30 grand worth of Bitcoin that you need to be able to reduce your volatility enough over enough blocks to where you're not worried about, you're significantly concerned about capital loss. And that's a pretty big hurdle as well, right? I mean, it's a large capital outlay for anybody, really, unless you're like a multimillionaire or billionaire or something like that, right? I mean, but for the average, for your typical blockchain enthusiast, it's probably quite a bit of capital. And then, there's a lot of volatility in the stacks BTC, exchange rate, right? And that means that you take on a lot of risk when you're mining stacks. So, I think those are kind of the two big things, like just the technical hurdle of actually getting a miner set up. It's not simple. And then, there's a lot of economic risk.
So the two biggest hurdles for you, because obviously this is something you've looked at doing, looking at running if it was even possible to run a stacks mining pool, the two biggest hurdles you see were the technical setup cost and then the actual monetary kind of starting capital to get started.
Right.
Yeah. Codex, any thoughts there? Perhaps even on the technical side of things.
Actually, I agree on that as well, because even so, I come from a technical background, and setting that up also was, at least at the time, was not necessarily an easy endeavor. But I think the capital requirement was a bigger hurdle for me, because before that, at the time I wanted to try that, I first looked at let's say first I wanted to do some research, and I realized like the capital requirements is high and the profit margins are low. At least that's what I thought at the time, which later on when you dive in more details in what Matty has done, he has a great report on, it seems that, if you take in a lot of different factors, it's higher, but at least from on the surface, it appeared that the profitability of that is also a lot lower compared to the hurdle and the initial capital requirements that you need.
Yeah, makes sense. I mean, I think in my latest numbers, it's still Bowtie, perhaps not 2.5 Bitcoin, but it's still in the tens of thousands of kind of US dollars of capital to kind of de-risk yourself to get started, as well as these kind of technical issues that you're mentioning, Codex. So you didn't find it super intuitive, even as a relatively technical, developer. So those are definitely challenges to explain perhaps why there haven't been more miners of stacks historically. But there's good news on the corner, right? 2.1 brings some very important features that enable decentralized mining pools. And I think that's pretty much the holy grail for any type of mining, whether it's proof of work for Bitcoin, right? Whether it's, not personally a huge fan of proof of stake, but, being able to delegate to a delegator is conceptually the same thing. So I think that will unlock quite a lot of more mining activity on stacks, right? Because when people are able to reduce that technical challenge, reduce the amount of capital they need to actually get in the game, that will be a game changer. Muneeb, as someone who's run, Bowtie Muneeb, I should be clear, as someone who's run, Citicoins mining pools and has looked into stacks mining pools, even considering running custodial ones, getting, that license and everything. What are you most excited about? What do you see as the biggest changes here? Do you think this will change the shape of stacks mining?
Yeah, it's a good question. I would say that being able to pay mining rewards to a smart contract really allows, begins to allow for the enabling of decentralized mining pools. There are still challenges there, of course, right? Like, on the stack side, for the payouts, you can definitely have those go to a smart contract and pay out to pool participants. But, you are going to rely on a centralized authority to effectively direct Bitcoin to mining, right? Because ultimately, like the Bitcoin has to come from a single miner, right? At least that's the way like things are currently structured within the Stacks ecosystem. Like,
yeah, but
you
I
have
think
to
it's
send
also enabling
Bitcoin address.
But it's also enabling multi-sig wallets to be able to submit.
Okay. So if a multi-sig wallet could submit like Bitcoin bids, right? I mean, I guess the challenge there is like, okay, let's say it's like a 3 of 5 multi-sig, right? Do you have to have 3 people sign every single time a bid goes out?
Presumably, yes. In a similar way, but I imagine you could, automate that in a similar way.
You could probably automate that, yeah.
Right.
Yeah, I mean, I guess, yeah. I mean, like, listen, if you can have like a multi-sig handle the Bitcoin bids, right? And you can have the payouts go to a smart contract, kind of the sky's the limit then, right? I mean, like then it becomes just the technical hurdle of being able to automate the signing of the multi-sig, and figuring out a way to have maybe the payouts from the smart contract occur in an automated fashion, right? As opposed to having requiring like somebody to actually execute the transaction. But yeah, I mean, that's like a big step in the right direction, I would say.
So were those the 2 biggest blockers when you looked into it, being able to basically submit the bids, which are denominated right in Bitcoin and in sats, submit the bids in a non-custodial way, a multi-sig way, and then also on the end of the piece, when you've won a stacks block and earn the Coinbase reward and the fees reward, distributing those stacks to someone trustlessly, which would be done, presumably via smart contract, which 2.1 enables. With those are the two biggest hurdles you encountered?
I would say so, yeah. And because there's so much centralization that's required there. I'll also say that coming from like a U.S. jurisdiction, there's also a lot of concern about regulatory there. Like, if you're essentially managing, or like, if you're set in a centralized party that's moving around this Bitcoin or these stacks, then you could be viewed as like a money manager, and then you need a license for that. Whereas if you can have it all work through like a multi-sig wallet and a smart contract, all of a sudden maybe that's no longer a concern.
Awesome. Yeah. I think that's a good point. Sorry, Codex, did you have some thoughts?
Yeah. I think that's what I think. It could even make it a lot more interesting than when you can have a full-fledged DAO built on top of that, where you can operate fully decentralized and have the governance and everything. And this, I think that will be quite unique, especially in the Bitcoin ecosystem. And it's on Bitcoin. So this could be quite exciting.
Yeah, I think that's a good point. I think, as you guys are both saying, there's still some 2.1 definitely moves us in the right direction by leaps and bounds towards enabling, decentralized, non-custodial, mining pools and improving the number of miners. But there are some hurdles that remain, as you guys are saying, if I'm hearing you correctly, about some kind of federated or slightly trust-based system of who is holding those keys of the multi-sig wallet, for example, of who's submitting the bids. So that could be some kind of federation or DAO, or like Frigger's pool, some small group of highly trusted people who have a lot on the line that there's no reason there could be 10 different mining pools, right? Where you can diversify your kind of exposure among different parties. But obviously, the smaller a pool gets, the more closely it gets to the downside of being an individual. So, Bowtied, any thoughts there about what the evolution of non-custodial mining pools might look like?
Yeah, I think it's going to be, I'm going to be honest, I think it's going to be a tough slog for anybody that wants to launch a new mining pool, because you don't think it'd
be as simple as launching a staking pool, for example?
No, I don't. I mean, you mean a stacking pool? A stacking pool has its own challenges.
Yeah, of course, a stacking pool, yeah.
A stacking pool has its own challenges, but no, I mean, it's going to be more difficult, and it's going to be more difficult primarily because there's like a maximum threshold of Bitcoin that can be bid in every block, right? So, I think you're going to be constrained, like any new miner, the number of total new miners is going to be constrained by that probably. You're going to be competing with a number of entrenched miners already, many of them of which probably have like large bases of stacks already stacked. They're probably doing like the whole discount mining thing where effectively their cost basis is lower than the cost basis for other miners. So, I'm not saying it's impossible, right? I'm just saying that like from an economic perspective alone, it's going to be pretty challenging.
Yeah, makes sense. I think, Codex, any other technical challenges you foresee?
What I think, if you think about it, generally running mining, probably also Bitcoin or any other chain, mining is generally more of a challenging endeavor technically. So normally when somebody decides to go in that direction, it's expected to have to deal with some extra level of technical complexity compared to let's say if you want to do stacking or any other operation.
Yeah, makes sense. Yeah, so still some hurdles for sure, but sounds like if anything, that represents an opportunity for entrepreneurs maybe listening in on this event to step up after 2.1 launches and figure out the last remaining few steps that need to be completed to launch some mining pools, non-custodial stacks mining pools. Bowtied, any hints there? Anything you're considering?
Yeah, I've definitely thought about it, considered it. I think well, I don't want to give away other people's alpha, but I think there are a couple of other teams also in the ecosystem that are working on this as well.
Yep.
So, I suspect probably after 2.1 is launched, very shortly thereafter, we'll start seeing more innovation around stacks mining. But yeah.
I think that definitely sounds inevitable. And I know a lot of people will be looking forward to that as occurs and the decentralization and security of the network increases. I think, in the analysis I've run, there have been some other promising signs that kind of show that miners come and go over time, but they stick around as as elements like the stacks to Bitcoin price ratio go up, right? You get more miners sharing the profit in general as there's more profits available. So hopefully with a kind of boost from 2.1 and adoption, it'll bring a benefit to the increased number of miners in multiple ways and attention to trying miners. There's also a couple proposals to almost experiments to see if there are other ways to improve the decentralization of mining other than just pools that have been discussed. I don't know if either of you guys have followed those too closely, things like dust mining or weighting larger bids, kind of discriminating against larger bids versus smaller bids. Any thoughts from either of you guys there?
Yeah, so I remember there was hundreds and hundreds of posts on a particular thread in the Stacks forum
thread for anyone.
Yeah, exactly. Yeah. I mean, I thought there were a lot of great proposals in there. I can't, it's been a while since I've really grappled with this, but I'm not really sure I understand the dust mining aspect of this so much. I do think the idea of like weighting bids could potentially work. I'm not really sure how you would do that. Like off the top of my head to improve decentralization or security. But I do believe that, there's probably some efficiency to be gained there. It's also it's a risky thing to do, right? Because, it's hard to say how it plays out in the long run. And right now, even though there's only 5 miners, some people may look at that as like a negative, right? But if you look at like the number of like Bitcoin mining pools, it's like what, like 7 to 10 or something like that. So we're really not that far off. I guess what I'm trying to say though is that like, what we have works at the moment. It's not always perfect. But there's also risk to changing it up. I think that we should explore all options for sure. I think it just got to be sure to do like a lot of modeling, and you got to really kick the tires on it to make sure we don't break anything.
Yeah, I think that's key when you're changing anything, related to the consensus mechanism of any protocol, not just modeling, but also knowing that even if you go ahead with the change, that there's kind of like a fixed understanding of what the possible scope of things that could go wrong is. So even if your modeling is completely wrong, right, or absolute worst case scenario occurs, there's still a known boundary of bad outcomes that can occur. Yeah. So I think those are all great things to keep in mind as we have conversations about improving stacks mining, as we have conversations about how to make it more decentralized. Definitely a lot of benefit to doing that, and a lot of improvements coming along in the near future to improve that. And we can continue to make changes and continue to make experiments, but also need to keep in mind that the priority should be, the decentralization of security and stability of the L1, chain itself, or the base layer chain itself of stacks and its mechanism to secure to Bitcoin. So we're out of time. I'd like to thank both Muneeb and Codex for being here. Thank you both. And I'd like to throw it back to Kyle to continue the event.
Thanks, Maddie.
Thank you all. And thank you very much, Maddie Stacks, for passing it back. Excited to move into our next conversation, all about the future of gaming, specifically around Web3 gaming and the transition from gaming of the past to what we are looking forward to in the future. We've got an awesome panel for you. And with that, I will turn it over to Zero Authority. The floor is yours.
Good morning, good afternoon, good evening, wherever you are, whoever you are. Thank you for tuning in today. I'm Zero, the co-founder of Zero Authority DAO. Really great topics covered today, and we're going to have another great conversation here. One up, getting another life in Web3 gaming. Today, we're going to talk to Diego, Anatoly, and Jonathan, who will all have familiar knowledge of building engaging platforms with unique gameplay and NFT use cases. They have all each been pillars of the Stacks ecosystem, and their contributions to the GameFi world has been really crucial to get us started, to get us knowledgeable, and to keep expanding. Diego, Anatoly, and Jonathan, how are you guys today? Can you tell us more about how you got started with Stacks and your role in the ecosystem?
How you doing, Zero? Anatoly, Sir Jonathan, nice to see you guys here. Thanks for having us. Yes, I started an ecosystem system of mining city coins. That was my first engagement. That's how I got to Stacks. And then as a founder of City Packs, was the first nonprofit NFT project. And our goal is to raise and build educational resources for public school kids. It's been about 6 or 7 months since we dropped. We've been able to raise over $12,000 for school kids in Miami. And recently I joined the Albert's Web3 Startup Lab, which was really life-changing. And I joined Dylan as co-founder of Bitflow, and happy to be here.
Anatoly, can you tell us how you got started with Stacks and your role?
Yeah, sure. Hi, Zero. Hi, Diego, and Jonathan. Happy to be here. So my name is Anatoly. I'm co-founder at Stacks Force. We're building a Web3 gaming platform. And previously, we spent more than 10 years building Web 2.0 games. And this year, we joined with Diego at Albert's Web3 Startup Lab at Stacks. So now we're excited to be here and building on Stacks.
Hello, guys. Yeah, hello, guys. I'm Jonathan, the founder of Stacks Degens, and for the past year, we've been trying to pave the way for Bitcoin into GameFi by mainly developing the right infrastructure on Stacks for it. And this kind of can be summed up into two different things. One being smart contract side, and the other one is the web integration side. Also, everyone here has been supportive for the past year, from Stacks Foundation to Stacks Ventures, and I want to thank them through this way. Yeah.
Absolutely. The ecosystem is committed to seeing that everyone is successful, and we've been so thankful that we have all of you and the community behind us here championing and being the driving force for each of us. Jonathan, and the transition from Web 2 to Web 3, how are we going to get more people to bridge over into Stacks and to Bitcoin? What you've done and your team behind the Stacks Degens with the racers and customized NFTs has been so awesome to see.
Thank you very much, and that's a really great question. There kind of are 4 main pillars for facilitating adoption. One would be the user experience, because obviously as a newcomer, you have all those new things such as wallets, key phrases, NFTs, etc. You get the point. Next, you need to provide a safe environment, because as we all know, some of the largest hacks ever have been in the GameFi sphere. But luckily, we're building on Stacks, and security isn't necessarily an issue. Then there's the side of better games. And that's been one of the greatest problems, because as a game developer, you need to adapt to the blockchain. And if you don't have the right infrastructure, you're really going to have a really hard time building better games. And last but not least is we need to facilitate a better understanding of the space. And we're also trying to achieve that we've actually done an R&D on GameFi, and we will soon be sharing that with the community. So hopefully that would make things clearer. Thanks.
Thank you. Anatoly, how important is decentralization in GameFi and what we're trying to do? Should it be a must-have or is it a nice-to-have? I know you and I have talked about this many times, so interested to hear your take and let people tuning in get to know you more and learn about Stacks Force.
Yeah, that's a great question. Thank you. So game development and gaming industry, it's all about players and they really want great experience. And you have game developers, they want to build great games. So that's so simple, but today we have a lot of centralized companies between players and game developers. So right now, if you want to build a game, you have to spend less time on building a game than on marketing and all other stuff. So in my opinion, if we want to make the whole industry better, decentralization is a must-have story, because when you have any part of centralization, it's really making all things more complex, more expensive. You have to spend more time on that. That's why, at least when we're building Stacks Force, our protocol, we aim to get decentralized in the future. But I also will not say that being decentralized from the very beginning, it's an easy task, you know. So in my opinion, decentralization, it's a critical part of the GameFi in the future. And I know that many other platforms, they're also building in a decentralized way. So I think that's a must-have feature.
Yeah, I agree. I think over time, we don't think about decentralization because people want cheaper, faster, but there's going to be a time, case in point. We've seen some people coming to Stacks ecosystem recently because, hey, the narrative is now that Ethereum is proof of stake, there isn't so much emphasis on decentralization, but with Stacks and Bitcoin, that's a core pillar of what we all believe.
Yeah, that's a great point.
Hey, Diego, I've seen your journey with Stacks and CityPacks and BitFlow. What you guys created just has been short of astonishing. And the use cases with NFTs to engage community and give back to local kids in Miami-Dade County has been awesome to witness. Tell us how teams and companies are using NFTs to engage their communities.
Yeah, good point. Thanks, Hiro. I think there's two communities that we have to look at. It's the users that are online and using the computer and on their phones and on Twitter, on Discord. And then we have to kind of step outside this bubble and look at the actual community around us. And that's what we've done with CityPacks. A lot of the brands today are leveraging POP, proof of presence, right? We can also say proof of purchase as well. Joining events as well. We've seen a lot of NFT badges that are being used as a way to create that social Web3 identity. You donate to charity, you get a badge. You complete a collection, you get a badge. You complete a game, you get a badge. In terms of how do we increase community access, or how do we increase access to Web3 in general for public school kids, in our case with CityPacks? One example is we're working with Stacks Degens, Sir Jonathan here, to create a Web3 gaming curriculum to teach kids how to program and how to build a game. As opposed to teaching them blockchain from the start, you start with something that's fun, that's engaging, like, breaking the game apart and putting it back together and customizing the cars and customizing the tracks. So that's one way that we're piloting this program in order to start this Web3 curriculum journey. And we're super excited for that. And I think this bear market has shown us other opportunities to use NFTs, and super excited to see where that goes.
Speaking of the bear market, Jonathan, is GameFi during the bear market a good time to build? And we also noticed that you guys are implementing BNS. Have you been interested with all of the BNS activity across the board, and how it's during the bear market here is still going hyperbolic?
Yeah, as we all know, the best time to build is pretty much in the bear market, because during bull runs, there's always this rush feeling. You always need to get everything done as fast as possible. Everyone is rushing for whatever their goal may be. But the downside of rushing is that in crypto in general, if you do something in a rush, it generally ends up in exploits. And we've seen that in many cases. So rushing is never a good option. Also, the way the preparation works is pretty much just like dancing, and you have this rhythm, right? And you're maintaining the rhythm, but if somehow you mess up, it's pretty hard to catch up with the rhythm itself, basically, if you do not maintain the rhythm. Now, the same way it works for building anything in crypto. During bear markets, you have time to adapt, to really think your strategy as well as possible, and kind of make sure everything goes fine and prepare the product or the products to the best of your ability. Regarding the BNS names, I'm quite excited to see, because obviously there has been some adoption on ETH, on .ETH domains, and the logical question obviously is, why not the .BTC domains adoption? So what we're trying to do is always kind of stay on top of the trend. So with that, we want to allow users who have a BNS domain and want to claim an NFT, for example, to have that NFT named after their BNS name. So let's say you're buying a profile picture, right, as an NFT. Wouldn't that be way more cooler if the actual profile picture was named 0.BTC? That's what we're mainly trying to achieve by that.
Absolutely. I would agree 1000%. It would be really cool. Hey, Anatoly, Stacks Force launched the chess game during a bear market. Have you guys, I've seen a lot of people playing, so are you surprised with all the attention that you're getting?
Yeah, I sure think it was really unexpected. So we've seen a lot of matches and a lot of requests on other games. So that's why we have to work 24/7 right now. It was really unexpected.
And Anatoly, how can we solve some of the big pain points from Web2 game developers trying to transition to Web3?
Yeah, thank you, Hiro. That's a great question, because building a game itself is a very complex project. And with Web3, we shouldn't make it even more complex, you know? That's why, in my opinion, we should take away the whole blockchain development for Web2 game developers. So we need to create libraries, SDKs for them, so that they don't need to spend a lot of time on learning how to create smart contracts, how to approach blockchain. And also, so it will be much easier for them in terms of development. But second pillar is that it's all about marketing. They don't know how to market in Web3. So we have to give them very straightforward tools and guidelines how to do it, and better to supply them with already some gaming communities, so that for you as a game developer, Web2 game developer, it will be a very easy decision to do something in the Web3. That will inflate the market with, I don't know, thousands, probably tens of thousands of games, even in 2023.
Hey, Jonathan, I know you guys built a really cool game and you guys built a community around it. Can you explain the differences between Web 2 and Web 3 community building versus Web 2 marketing?
Yeah, Well, you can. It mainly starts even with the name. If you look at it, the chances of you seeing a Web2 game named Degen Racer or something along those lines are pretty small. So the vibe itself of Web3 gaming is way more lighter in a way. There's also the economic incentives, which kind of changed the whole marketing perspective by a lot, as we've seen with X Infinity, for example, and a lot of other GameFi projects. Many users tend to come up for the, as I've said, economic incentives. Now, the main reason for that is that the games themselves kind of lack the whole amplitude of what Web2 games currently have, but that's mainly going to be a thing of the past. And I genuinely believe that slowly but surely we're going to see a way more developed games into Web3 coming, such as AAA games, for example, as the infrastructure is being built.
Mm-hmm. Diego, how will the use of NFTs in the game space transform Web3 gameplay, and does it add value to own your game assets?
Yeah, good question. I've always questioned that when I was playing a game and you maybe find a special item, or I'm playing Call of Duty and I'm buying this really cool gun or vest, and then I download the other Call of Duty and all my stuff is gone. So ownership, I think even if you remove the economic, transfer the value like to somebody else, just being able to transfer that asset to another game is going to create this multi-game marketplace where you're going to be able to use the Nike shoes from game 1 on game 2, right? You're going to be able to transfer over. You're going to be able to use NFTs also as your social identity in games, right? As we move into AR, XR, and VR technology, your visual avatar is going to be equally as important, and that's something that you can only transfer to today through NFT. So I think that's exciting. The other thing is esports. I think we haven't seen esports yet tackle this Web3 gaming space, but I think that's going to be huge for esports games as well, because you're going to be able to transfer your ranks, you're going to be able to transfer your data, you're going to be able to show your championships, you're going to be able to show your actual scores, if you're a midfielder playing FIFA online, you're going to be able to show how many tackles you had, how many fouls, how many shots, how many kicks. All that data is going to be transferred over to other games, and also transfer over to sponsorships, to brands being able to access that data. So I'm equally excited for esports as well. I think that NFTs is going to unlock, it's going to make the industry even bigger. As many people don't know, games is bigger than movies and Netflix combined, right? So I'm super excited for that.
This has been a really insightful conversation with you guys. Thanks so much for the wonderful chat, Diego, Anatoly, and Sir Jonathan. Really appreciate what you guys bring to the ecosystem. Really appreciate you guys being collaborative and helping everyone across this ecosystem. And thanks for inviting us today to have this chat. So we're going to send it back over to Kyle. Thanks again. Really appreciate it.
Thank you, guys. What a great panel. Excited for the future of gaming and what's to come in the near future. And with the near future, we've got a big discussion about what's to come around the Stacks API and the roadmap ahead. With that said, Raphael, the floor is yours.
Hello, everybody. Hello, everyone. My name is Rafael Cárdenas. I'm a senior software engineer at Hiro. Today, I'm going to talk about the Stacks API, the developer roadmap that we have, and some of the recent improvements that we made to it. The agenda today would be, first, I'm going to give a very quick recap on what the API is and what it does and what its purpose is. Next, I'm going to talk about recent improvements that we made to the API to make it more performant, faster, and more useful for developers. And lastly, I'm going to talk about future plans that we have, some cool stuff that we're going to be adding to it. So to start off, let's recap some of the things that we built in the last couple months. Sorry, the recap on the API first. I'm going to talk about briefly what the API is. The API is a blockchain indexer, which means that it takes the events from the chain and indexes them into a Postgres database, which we then use to open up JSON endpoints so that developers can query historical chain data. And we also provide node RPC forwarding, which means if developers want to broadcast transactions or make contract calls, the API allows them to do so without having to run a node themselves. This is a very brief diagram of the current API architecture. As you can see in the center, we have the blockchain API that consumes events from Stacks nodes. These events, again, are everything that happens on the chain, so blocks, microblocks, transactions, etc. We then take those events and we put them in a database, as you can see on the right-hand side. And then we use that database to power up HTTP endpoints so that developers can query that same data. We also offer WebSocket servers so that if developers are interested in receiving real-time events, they can do so through these servers. And this is how the API works today. So just to recap, some of the data that is available through the API are blocks, microblocks, transactions, contracts, NFTs, etc. Right now, during the past 30 days, for example, we've served around 330 million requests, which is obviously a lot of traffic. And we work very, very hard to be able to increase this capacity so that more developers that are joining the Stacks ecosystem can use this API to power their applications and everything that they want to build on the ecosystem. So in order to do that, I'm going to give you a very quick recap on the improvements that we've made recently to the API to, again, make it faster and more useful for developers. I'm going to talk about 4 key things that we've added. First, we've done a lot of BNS name improvements, which I'm sure you know, it's something that is really, really popular right now in the chain. We also added support for NFT WebSocket events. I'm going to give that detail shortly. We've also added some endpoints that give you statistics on the mempool and the current traffic of the chain. And lastly, improvements on the event import process. So for BNS names, we've done a very important thing. So first of all, we've improved how we support names that existed from Stacks 1.0 chain. So we greatly improved the name import process. We've recalculated all the expirations to make sure that we display them correctly. We also manage subdomains in the best way possible. This comes with some upgrades to how we handle chain attachments. So if you're familiar with BNS, this is a key component for names to work and subdomains to work as well. So we've added support for batched updates on attachments in the database. We've also increased and improved the consistency in which we show the zone files that are available on the chain. And we've also added support for newer marketplace use cases. So I'm sure you know BNS has been trading a lot on marketplaces. We've added support for escrow contracts and for some innovative stuff that is happening, which, for example, is registering and transferring a name in a single transaction. Lastly, we've done a lot of performance improvements. We've added caching, table optimizations, etc. For NFT sockets, we've added 3 new channels so that you can consume NFT events faster and more conveniently. So first, you can subscribe to all of the event updates that happen on the chain. You can get every mint, every transfer, every burn on the chain. You can also filter that via collection. So if you're only interested in a collection, you can do that. And also if you're interested in assets as well, individual NFTs. For mempool, we've added a statistics endpoint that gives you the current traffic in the chain, basically. So we can group this traffic by transaction types, contract calls, transfers, etc. We can group them also by transaction age, depending on block count. And we also give you percentile so that you can do some statistics analysis, and also by fee rate. And we provide all of these statistics through the Prometheus endpoints that we currently have. For event import, right now, in order for you to run an API node, you need to import the chain data in a TSV file. This process used to take around 18 hours, and now it takes like 4 hours, which is a massive improvement. And this also has added some BNS v1 improvements, and also prune mode in order for you to focus only on the data that is most relevant today. So this is our future plans for the API. We've added some cool stuff, but this is what we're going to be building next. We're focusing on 3 key things. First of all, we're adding Stacks 2.1 support. I'm sure you all know, we've had some great sessions about it today. So the API is adding support for this, of course. Also for Subnets, which is the scaling solution for Stacks. And lastly, we have a big effort to divide the API into microservices that can allow developers to choose the components that they want to use for their applications. So I'm going to dive in a little detail about this. So first, Stacks 2.1. Stacks 2.1 brings about POX2, so Proof of Transfer 2. This contract is the new implementation of this process. We're going to be adding support for this on the API, of course. Also, we're going to add the new transaction types that are available in Stacks 2.1 and everything else that comes with it. Our goal is to have this available mid-Q4 as a release, but definitely ready, of course, when Stacks 2.1 hits mainnet, so that the change is completely transparent for developers and absolutely 100% backwards compatible for the rest of the chain history. For Subnets, our goal is to be able to provide an API that you can run alongside the L1 chain, but also alongside a subnet chain. So we're going to make this completely subnet node compatible. You'll be able to see token deposits, withdrawals. We're going to add new endpoints so that you can filter these out if you need them. And we're also including this subnet support in Clarinet Integrate, which I'm sure you know if you're a developer. Clarinet Integrate is very useful for developing on Stacks. So it will have support for launching a subnet node and a subnet API as well. Lastly, microservices. So I'm sure you know the API right now is a great component. It has a lot of power, but it's also becoming a little bit complex in what it does because it has to do a lot of different things. So our goal is to keep the API as a core component on the ecosystem that you can use to index chain data, and then split up the different features into microservices that you can pick and choose for your specific application. So first of all, we're adding some new exciting endpoints that bring about the compatibility between Bitcoin and Stacks. So for example, if you want to derive addresses between them, if you want to query data across the chains, we're going to be adding a lot of endpoints for you to do this. And we'll be providing them via a microservice. We're also adding the token metadata service, which is this specific service that gives you information about NFT metadata, FT metadata, and it keeps track of metadata updates via SIP19 and also is compatible with SIP16 standards. It will give you localized data. It will give you the addresses, IPFS images translated into HTTP URL so you can call them, etc. Next, we're adding a great set of endpoints that will allow you to interact with clarity via JSON only, which means right now, if you want to call a function on a contract, you need to first encode the arguments to a clarity value and then send that value into a node. So this service will allow you to do this via JSON only and also give you the results in JSON. We're also adding some caching to this and some other cool things so that you can make sure that it's performant and that you don't have to add manual support for these encoding and decoding, especially if you're not developing your application in JavaScript or in other languages, which we don't have tools for right now. We're also spinning off the WebSockets into a separate service, which means that the WebSocket server and Socket IO, our goal is to have it in an individual service that is able to be tuned for the most performance for these events. And developers will be able to either serve them in their own environment or use our own through this dedicated service. Lastly, we're going to be moving Rosetta out of the core API into its own microservices. And this would also be very useful, for example, for some exchanges or applications that rely heavily on Rosetta because they also use other chains. So they'll be able to just run the endpoints that they need or use the Hiro provided service to do just that. So this is a quick timeline of the current goals that we have. So in Q3, we released the improvements that I already discussed, BNS, NFT sockets, event import improvements, and mempool stats. And for Q4, our goal is to finish up Stacks 2.1 support, Subnet support, and also start adding the first microservices. We will begin with the Bitcoin and Stacks endpoints. We're going to be adding the Clarity JSON service as well. That is our goal. And then for Q1, we'll be pushing up some of the rest microservices as well. So if you have any questions about any of these, or if you want to reach out to us, please make sure to join our Discord. You can reach us out from there or through our GitHub repositories. We're always very receptive of community opinions and what their priorities are. So thank you so much. I hope this talk was useful, and thank you for being here.
Thank you as well. And thank you to all of the community that is continuing to stay with us today here for the Bitcoin Unleashed Builders Edition. If you haven't done so already, make sure that you are checking out the technical track in addition to our Builders track as well. And as we continue today's discussion, now that we've seen a little bit of the roadmap and what is to come for Stacks 2.1 and the Stacks API, let's talk a little bit about stacking and unlocking continuous stacking, that is. With that said, Dan, the floor is yours.
Thank you. Well, thank you. I appreciate it, and really excited to have this awesome panel. Today we've got Alex Chiswick. Okay, sorry, that was my bad. It's a little bit difficult. I'm from Texas, so it's a little bit difficult to pronounce these things. But Alex from OKCoin. We've got Ken Liao from Xverse and Tycho from Zest Protocol, a trust machines company. So welcome, everyone. Really excited to have you here. Today, we're going to talk about Stacks 2.1, continuous stacking. So to get us started, Ken, I've personally used Xverse before. It's a really great app. Can you walk us through some of the basics of stacking and what's going on here?
Sure, yeah. So stacking is basically a Bitcoin yield generating mechanism that's native to the Stacks blockchain. And it derives the yield from the proof of transfer consensus mechanism, where the miners of Stacks tokens, they will expend Bitcoin in order to mine Stacks tokens. And the stackers who hold Stacks tokens and lock them up will receive that yield paid in native Bitcoin. Now, there's a limit on the protocol where you need to have at least 130,000 Stacks tokens in order to stack by yourself. So there's multiple solutions that came out to have these kind of pools, whether it's custodial or non-custodial, so that users with less than 100,000 Stacks tokens can participate in stacking.
Okay, great. And how does that stacking process exactly work from like a user's perspective? So if you don't have a ton of Stacks tokens, you've got just a few, how would you go work? How would you do this in Xverse?
Yeah, so through Xverse is actually super simple. If you have 100 SDX or even more in your wallet balance, you can go to the Xverse Earn screen in our mobile app, and you tap stack your stacks, enter in the amount that you want to lock for, choose the number of cycles, and those transactions will get broadcasted, and you'll be enrolled in the next cycle. So stacking happens in 2-week cycles. So when you delegate to a pool, you won't be locked until the next cycle actually starts. And then at least for Xverse pool, at the end of every 2-week cycle, we will distribute the Bitcoin rewards received by the pool to each individual stacker.
And why do people have to lock it up for a certain amount of time? What is that? What are these time intervals? Why is that required?
Yeah, so when users lock up their Stacks tokens, they're basically signaling that this chain that they are locking up their liquidity for is the right chain, and it's doing the correct thing, right? And no miners or any other potentially malicious people are trying to game the system. So they do provide a value, and right now users have to choose how long they lock up for, from 1 to I think 12 cycles. But I think in version 2.1 of Stacks, there's you can enable continuous stacking, which means you don't have to kind of like choose 6 cycles and then when you unlock, you have to have a cooldown cycle where you miss out the yields in that one cycle.
Okay, appreciate you walking me through some of the details there. I know that some of the audience may not understand exactly what's going on there, so wanted to cover some of the basics. Alex over at OKCoin, what is different between the new way of stacking with 2.1 versus the former method? Can you kind of give us an update on what the new sort of stacking system will look like?
Yeah, sure. Thanks, Dan, and hey guys on the panel and to all the audience members. I think stacking is a critical part of many crypto ecosystems, Stacks included, obviously. And this is what I think gets people excited in general about smart contracts is you can get yields, right? People love airdrops, yields, NFTs. This is what gets retail going, and stacking is core and essential to that. What we've seen before, especially from an exchange point of view, users or customers that come in, DCA into the market, folks that are regular retail investors that just want to buy and hold tokens. Stacks gives that exciting ability, as well as obviously the smart contract ability to Bitcoin. It adds a second layer. This, Stacks 2.1, if you will, creates a much smoother experience, inter-op experience between Bitcoin and that smart contract layer on top of it, namely through stacking. And from our perspective, Ken talked about it a little bit. Basically, when you stack, when you're putting your money down and saying this is the right chain and it's doing the right things, as Ken said, you have a cool down period at the end of the 2 weeks. So it is a very unique thing to the proof of transfer protocol that Stacks has. So let's say I want to stack for 1 cycle. I would stack before for a 2-week cycle. I would redeem my coins, my Stacks, and my Bitcoin rewards. After 2 weeks, call it day 14.1, right? I get my coins back. Then I have to wait 14 days because that second cycle started when I redeemed my coins from the first cycle. So I can only start stacking in cycle 3. Okay, I stack for 5 cycles. I missed the 6th one. I stack for 7 cycles. I missed the 8th one, and so on and so forth. Continuous stacking allows me to, as Ken mentioned, generate more yield because I'm not missing, there's no cooldown 2-week period. And so it creates a very seamless user experience in order to stack and restack and get more rewards. And frankly, a more flexible period, because you don't have to think, well, should I stack for 1 cycle or should I stack for 12 cycles? A lot of customers that we've seen come into this decision fatigue of, well, I really want to get the rewards, but I don't know what's going to happen to the price, right? So I don't want to be susceptible to price volatility. So I'm afraid of locking something up for 12 cycles, which is 24 weeks. That's a long time, right? That's more or less half a year. And maybe I want to do it for 2 cycles. Continuous stacking removes that decision point. It makes the whole chain much more seamless.
That's a great explanation. That makes it very clear of kind of like 2.1 is a more seamless, much easier stacking process versus having to think through, what sort of time period do I want to lock up my funds for. So really appreciate that. Appreciate you diving in on that. And Tycho, I want to bring it over to you. You're the yield guy with Zest, what you're working on, Zest protocol. You're thinking about lending and borrowing and yield and what that all represents. When people stack, stacks and get that Bitcoin yield, what exactly is that yield, or what would you call that exactly?
Yeah, it's an interesting question. I think the kind of yield that you're getting is essentially yield for securing the network, right? So you're getting Bitcoin yield, and essentially you're getting that yield because there are miners, right, willing to spend Bitcoin to secure the network, to secure the chain, and in the end to get the transaction fees as well, right? So it's really kind of, in a way, it's kind of a way to give the transaction fees or the Coinbase sort of reward back to the people who sort of are invested in the network. So I guess that's sort of how I would think about stacking yield. And but yeah, the problem with it is that, or until now, it's not been very programmable, right? So you sort of get this Bitcoin somewhere, and then you would maybe transfer it or swap it for STX to distribute to the stackers. But what you get now is that it could, for example, go to a taproot address, right? And a taproot address could be owned by many more participants, right? And at that point, you could, with continuous stacking, you could have a smart contract that actually performs the stacking. So you could pool it in a smart contract. You could do all these sort of exciting things to basically make the yield that the network produces just from transactions, make it more programmable and easier to distribute to more people.
And so this isn't a yield that you would get on lending and borrowing, right? This is more of like a staking yield, or how would you define it? Because I'm thinking for like the common person who's watching this right now, it might be a little technical. So they're not earning a yield based on like risk of them lending out their coins. It's a different type of risk and reward. Can you dive in a little bit deeper there? I know you touched on it a little bit.
Yeah. Essentially, people are not really. So the only risk I think that people take when they are stacking is that they're taking STX price risk, right? Because STX might change in dollar value or Bitcoin value or whatever you denominate it in. So that's the real risk you're taking. But unlike staking on Ethereum or other proof of stake networks, like with stacking, the STX kind of never leaves your wallet in a sense, right? Also, if you would delegate it. So it's in that sense, it's a very secure sort of way of doing it, and you're essentially getting rewarded for taking, I guess, that STX price risk, right? So STX is still a volatile token, and you get that, by basically believing in the network, you get part of the fees that originate from the network through stacking.
Very cool. Really appreciate you diving in on that. I know for some folks, it took me a little while to understand the topic, so I think you did a really good job of explaining that simply. I'm going to open this up for the whole group. With this continuous stacking, this does unlock some sort of DeFi Legos or DeFi functionality where you've got a stream of Bitcoin, essentially. And whoever wants to answer this first, please speak up. But essentially, throwing this out to the group, what sort of new DeFi primitives, using this kind of like streaming flow of Bitcoin, what sort of primitives can you create from this, or what sort of applications can be built on that primitive is actually, I think, a better question.
I think maybe Ken would want to answer that, or Alex, or
well, yeah, I can go first here, and then I'll throw it over to Ken, because I'm a big fan of actually what you guys are building with Express, as I am Tycho what you guys are building with Zest. I'm a big fan of everyone. I think, look, I'm going to speak from an exchange point of view and from a very customer-centric point of view. There are many reasons why people get into crypto. Let's not belabor the, Bitcoin and, macro and federal policies and so on. I think for the lay investor, if you will, crypto is exciting. One of the exciting things is stacking. Stacks and proof of transfer is a very original way of stacking and earning yield on crypto, securing the chain, this whole proof of transfer protocols I mentioned. And to me, it brings an exciting layer to Bitcoin, right? A programmable layer for sure, but also a layer you can participate in. With Stacks 2.1 and continuous stacking, you're really allowing the ecosystem to create seamless compound return. So if I think of things like New York Coin and Miami Coin and things that are going to be built on top of those platforms that are built on top of Stacks, or like a Zest if you're doing lending and borrowing, you're, outside of a 2-week lockup, right? You're essentially allowing seamless flow of money up and down the stack. Then I can imagine somebody, and I don't know if I'm ruining someone's roadmap over here, or I'm suggesting someone's roadmap, or I'm leaking serious alpha. I really don't know, actually. But it would be interesting for a financial, to have a product that has some sort of intra-cycle stacking, right? So, hey, to give customers an ability to stack for a day or a couple of days or a week within that same 2 weeks lockup, where the protocol manages the risk, right? Manages the reward as a layer on top of Stacks. And then you're able to come in and out without the cooling period. I can see a lot more innovative financial products built on top of this that weren't able to be built before. Now, please, Tycho and Ken, tell me you guys are building this. If not, I give you guys free alpha. So all the profits you get from your companies, just remember who gave it to you.
Yeah, I think there's probably one or two companies that's building something similar to that. I don't know exactly, what kind of products people are building, but I have heard through various channels that, it's possible to create a passive Bitcoin yield product through stacking. So, right now with stacking, you might, miss out cycles because, you're because of the cooldown period, and it just isn't a very smooth kind of continuous income that you would get from stacking. But once that problem is solved, you could see, some type of product that will convert your Bitcoin, under the hood into stacks, right? And lock it up to generate a yield that's paid in Bitcoin. And then you could go out and purchase some type of, hedging instrument so that you're insulated from the price risk of, stacks to Bitcoin. And that way, from, the purchaser's perspective, you're essentially locking up Bitcoin to generate a Bitcoin yield. And you don't necessarily have to put your Bitcoin into somebody else's hands where, they could lose it or get hacked or something else can happen.
Yeah, you're basically hedging out like the sort of price risk you would take from like buying the STX, right, on a sort of decentralized exchange. And that's what Alex is working on, which is like some pretty cool stuff. Not Alex in this call, but or in this on this panel, but Alex Go, the DeFi protocol. And in general, it will be basically possible for smart contracts to do this, right? I think that's sort of just the layer of abstraction that it adds, right? Currently, only people can stack, or you need to join a stacking pool that is maybe custodial to some extent. And now smart contracts can stack, right? And then the outcomes of the stacking could be programmed in new ways as well, where they go, and that could allow for liquid stacking as well, right? So you could have like a tradable token that's basically representing stacked FTX. and all those kind of things. But yeah, I think one of the most interesting ones could be like you could actually use Bitcoin and sort of stack without the STX price risk, or with that hedged out, in fact.
Yeah, and so what do we have any like examples of some of these smart contracts using that stacking mechanism as a way to like have like zero interest for loans? Does this exist yet, or are these kind of more theoretical?
I mean, there's also Arcadico, right? So with Arcadico, you basically lock up STX, and then you basically take out like a stablecoin loan against that, right? But yeah, what happens behind the scenes there is that it needs to sort of be, you know, it can miss cycles, and it's not fully done by a smart contract. But then, you know, that can happen, where then just the Bitcoin reward just needs to be swapped to STX to sort of go back to the vaults, and in essence pay off the loans on a continuous basis. So that's also like an example of something that can be built here, for sure.
Very cool. And going back to Ken, Ken, what are some of the other updates with Stacks 2.1 that will either impact we already kind of covered how that's going to impact stacking, but what are some of the other changes that developers or people that use Stacks could look forward to?
Yeah, so I mean, just within stacking, there's tons of improvements. For example, now that SegWit, native SegWit, and Taproot addresses are supported in Clarity smart contracts in 2.1, which means that users are no longer confused why they can't use their Bitcoin address to receive their rewards for stacking. Because, honestly, a lot of people don't know the difference between a legacy and SegWit address, and they shouldn't need to, right? And I think also with Taproot Bitcoin addresses, this enables us to build these fully trustless stacking pools, where the pool's shared reward address is a Taproot address signed by all the participants in the pool. So the distribution of the Bitcoin rewards from that pool it can be initiated basically by the participants themselves, and the entire system could essentially run itself without the need of a pool administrator, which is what all the pools running today have. So I think those are definitely really big improvements, and will unlock a lot of powerful things.
And Alex, back over to you. With OKCoin, how are you all thinking working with Stacks 2.1? Does this change the OKCoin experience for your users, or is there anything that I know you all allow people to also stack using OKCoin. Is there anything new that's going to come from this that you're launching as a feature?
I was on mute. Yep, I was on mute. So user error abound. I can't link everything just yet, but one of the biggest feedback pieces we've had was that basically it's this dichotomy between 1 cycle and 12 cycles they have to stack for, right? And so this one allows us to give customers much more choice in how we allow stacking to happen. And by the way, stacking for us, for OKCoin, is a very critical piece of the product offering. We don't charge money for it. We just use whatever the protocol underneath gives as rewards, and we pass that 100% through to our customers. And so with Stacks, stacking Miami Coin, New York Coin, and so on, anything built on the Stacks ecosystem, stacking is pretty critical. And we've heard from customers all the time, especially for Miami Coin, hey, when I get Stacks back, can I get those Stacks and have them automatically reinvested, to basically earn Bitcoin? You have this cascading yield cycle that only the Stacks ecosystem can give you. And so when we think about, building out Earn and offering new products, I will push the product team. Well, I'll suggest the product team. I'll leave it like this, to create much more seamless stacking experience. Obviously, many more choices in terms of where people can stack and or actually for how long people need to stack, and automatic restacking. The other powerful thing is, let's say somebody stacks Miami Coin and you get stacks back, can you take those stacks and automatically, add them to staking within Bitcoin, to stake them on stacks to get Bitcoin? That automatic flow, right, from a user experience is going to come sooner or later. And I'd love to see that in OKCoin.
Awesome. And we're wrapping up here the last couple of minutes. I want to throw it back out to the group. I think I'll start with picking out, actually, I'll pick out individuals when we go through. What's kind of the last word you want to say on, your project, what you're working on, and where people can find out more about you? So we'll first start with Tycho. I would love to hear, can you give the audience a little bit more insight into what you're doing, why it's important, and where people can find out more?
Yeah, for sure. So I'm a general manager at Trust Machines, where we're building the largest ecosystem of Bitcoin applications. So definitely check that out. So at Trust Machines Co, I believe, on Twitter. And then I'm building Zest Protocol, right, which is an under collateralized Bitcoin lending solution where you can lend out your Bitcoin to some of the most creditworthy participants in the Bitcoin economy and earn a yield on it. We will very soon go to testnet. It's a couple of weeks away, so the date announcement will probably happen next week, and then mainnet later this quarter. So that's going to be quite exciting. And so that's at Zest Protocol on Twitter.
Thank you, Tycho. And Alex, would you like to go next?
Sure. Yeah. By the way, everyone should follow us, OKCoin, Tycho, and Ken on Twitter. Ken had a nice thread a few weeks ago or a month ago, I don't remember exactly when, on actually what all the changes are from Stacks 2.1. And it has to do with bridges and all the other changes that 2.1 brings. So definitely follow Tycho and Ken. I think both projects are quite good. Look, for us, it's at OKCoin. For me, if you guys want to follow me, Mr. EBITDA, MR, ITDA. And I would say the one thing that, for OKCoin, we've been big proponents and partners. We partner with the Stacks ecosystem pretty deeply. We take Earn pretty seriously. Again, we don't charge fees for Earn. 100% of the money goes from the customer to the protocol, whatever it is, Stacks in this case, or another coins maker, Curve, or whatever, and it comes back to the customer. So for us, it's all about bringing on great projects and enabling the most easy and seamless way to stack and earn and actually create yield within crypto and not just speculate on the price.
Thank you, Alex. And we'll wrap up with Ken. Ken, can you tell us more about what you're working on and where to find out more about you?
Sure, yeah. So we're working on Xverse, and Xverse is a advanced non-custodial wallet for Bitcoin and Stacks. Our mission is basically to make Bitcoin more powerful and scalable using Stacks and the Web3 applications that it enables. And also we are right now on mobile with a desktop version coming really soon. And in the next several months, we also want to integrate with Lightning. We also run Xverse Pool, which is the stacking pool service where you can earn Bitcoin by locking up your stacks. It's completely free and non-custodial. And if you want to find out more about Xverse, please go to xverse.app. Thank you.
Appreciate it, Ken. And thank you, all the panel participants. Really love the answers. Thank you for explaining a lot of it super simply. It was super informative, and I had a great time. Kyle, we're going to hand it back over to you.
Thank you very much, Dan. What a great panel, and exciting to hear about what is to come again around continuous stacking and so many of the possibilities within. Next up, we could not have a builder's edition of Bitcoin Unleashed and not talk about non-fungible tokens or NFTs. And we're going to talk about just that, and also how marketplaces will help NFTs evolve in the near future. With that said, happy birthday once again to Gamma, and Jamil, the floor is yours.
All right, thanks so much, Kyle, and thanks everyone for joining today. After that great panel on DeFi, we're now going to talk a little bit about NFTs. I'm Jamil, the founder of Gamma.io, which is the largest NFT marketplace on Stacks. And we have an amazing panel with 4 incredible people who have had a tremendous influence on Stacks. I think everybody in this panel has done, an incredible job of moving the ecosystem forward, and they're just an incredibly smart group. So we have Mark, the creator of Megapont, which is one of the first and the most successful NFT projects on Stacks. We have Brian, the creator of Satoshiables, an NFT collection that originally started on Ethereum, actually, and which was the first to bridge to Stacks and has seen, incredible success on that Bitcoin culture angle of NFTs. And we have Jessica, the creative director at Vayner3, the co-founder of Unum Game, with a lot of exciting things coming up there, and just a huge Stacks advocate and a huge cheerleader for the ecosystem. And last but not least, Lewis, formerly at the Stacks Foundation, now the founder of Rider, which just released the incredibly successful community namespaces, and has a lot going on in the hardware space coming up. So the title is How Marketplaces Will Help NFTs Evolve, but I actually think in my experience, it's almost been the other way around. I think all of you have fundamentally shaped how marketplaces have evolved on Stacks and have been, the leaders in the ecosystem. So just to start off, in your consulting work, you've seen a lot of projects over the bear market. Has the way you've thought about your own projects or what you've seen changed, like both in the strategy and prioritization? And how has that affected the way you think about NFTs?
Even before we got into this whole bear market narrative, a lot of the brands and a lot of what we've been encouraging bigger brands to do is to release digital collectibles. Also, we don't say NFTs anymore. That's like a dirty word. We say digital collectibles. To release digital collectibles for free as a way of rewarding their most loyal fan base and give their fan base a way to transition into this technology without, charging them for it, right? So it has changed because we're going around and kind of advising bigger organizations to do that. Naturally, a lot of other organizations model their behavior after what they see. So I expect to see a lot more free digital collectibles that ladder up into other things, like give you access to purchase products within their ecosystem or participate in the actual development and design of those products.
Yeah. Mark, does that line up with some of what you've seen? Has the bear market in the past few months have changed how you view Megapont and how you view your project, or is it roughly staying kind of along the same path?
I wouldn't say it's affected our roadmap just yet, personally speaking, primarily because we plan out 6 to 12 months in advance anyway. And we've really only been in this bear market for 6 months now, thereabouts. But I do think the ease of capital that was accessible to projects just a year ago has now vanished. So we're certainly seeing this increasing demand for free mints or low cost mints. The whole why can we price go up every single day has kind of dissipated. It doesn't exist anymore. So now you're seeing investors, collectors, whatever you want to call them, be much smarter around what projects they buy into. And there's a lot of consolidation happening. People are narrowing 100 projects down to 3 to 5 and really putting their time into just a few now. So we need to be mindful that the attention from the community is not as constant as it once was, and just plan accordingly around that, I think.
Yeah, Brian, have you seen something similar? How has sort of the Satoshiables ecosystem evolved, especially with the dynamic between the ETH market and the Stacks market? How have you seen your planning and your perception of how the NFT projects will evolve?
Yeah, similar to what Mark suggested as well. It's like the kind of the hype has kind of died down a little bit. We were all riding the wave last year, and everything was all amazing when people were buying everything. But the overall kind of roadmap, like Mark said, it's also not changed for us. We have a clear goal where we want to head to. It might just take a little bit longer. Funding is an issue for every project, I guess, and you need to maybe be a little bit more frugal with what you're doing now, and choose elements that you work on a little bit more smarter. I find it's also really cool to try and team up with other projects and, you know, help each other out where we can. I've found some success there as well. And, you know, the community side of things, you know, your core community really becomes kind of solidified in a bear market, I would say. I've found had a lot of great conversations with my community, basically saying, you know, we're still here and we're really excited about the future and everything. So that's really encouraging for us, because it is tough to work when the kind of hype is gone and you think, oh no, we've got to make it out of this, you know. So yeah, you kind of you just stick with it, you know, stick with your community, and keep going, keep building.
Yeah, Lewis, I know your project is oh, sorry, Jess.
I was saying it's really interesting to hear the perspective of the folks on the panel, because, you know, you're very much in like the Web3 world entirely, and I'm working with brands that don't normally engage with the Web3 community, and they're trying to figure out how to authentically utilize this technology. So for them, the bear market hasn't impacted them much, right? Because they weren't holding crypto in the first place. They were kind of afraid of it and weren't dabbling in that environment. So I haven't seen the same like lack of or decrease in excitement about the space or about projects from the world I'm in. People are like, oh, this is the new world of technology and we have to get involved in this or we're going to get left behind. There's a lot of excitement outside of the Web3 space for Web3. If you haven't been, you know, collecting NFTs this whole time and you're experiencing what it's like to be in this moment after riding the highs of the waves just not too long ago, I can see how there's this perception or feeling where you're like, oh man, people are kind of like not stoked about this anymore. But from outside of the space, there's still a lot of excitement about Web3 and about digital collectibles. Again, we don't say NFTs anymore, but I think tying the digital collectibles to real world physical products or things that brands are doing that people already love them for, like there's no shortage of excitement and delight around those products. So tying this new technology to their existing products and giving fans another way to engage with those products, that's super exciting for consumers and for the brands themselves. And it gives people a way, an onboarding, easy onboarding into interacting with this technology without even realizing it.
Have you seen any sort of major brands focus a lot more on that utility aspect, or are they just learning this? Or is that how they sort of started out in the mindset from the beginning?
I mean, everything's about utility, right? Like that whole era of, I don't know, just drop a thing with weird looking art is, I don't want to say like over, because of course you get the right personality and right energy behind it. You could do that. You could do anything, right? But as far as that being the focus of what people want to do, that's definitely, if anything, that's actively what people want to avoid doing.
Yeah, makes sense. Lewis, I know your project isn't directly like an NFT collection. It's more of like a large scale company, but NFTs are certainly part of your strategy, right? So how do you view NFTs and sort of linking up with utility and in like the role basically your company plays?
Yeah, no, there's a lot of questions there. There's like so many questions, but I think I'm gonna unwrap it one by one. But before I unwrap it, I think there was a really good conversation that Mark brought up, and then Satoshi, Brian, and also Jessica. Because if you look at the current market now, there's a reason why there's a lot of free mints, right? And there's a reason why brands in traditional web are getting excited. So right now we're in a cycle. Okay, my opinion are all debatable. My claiming anything, it's just like my thesis. So we're in a cycle where we take out the speculative premium of the NFTs and we're going to attach it to what we call an established floor value. And that established floor value will come on a Web3 brand, which Jessica pretty much mentioned. And I think for me, when I think about digital collectibles, because she will hate me if I say NFTs, it's all about changing the relationship between consumer and the product owners, right? So now you can actually build these subsequent experiences in order to build a brand trust and brand value on what you're creating. So yeah, that's pretty much it on like what NFT is. Then for Writer, it's pretty much the same, right? So imagine what does a hardware organization look like in Web3? what will happen when a hardware organization changes the relationship between consumers, right? I mean, I hate to take a shot at Apple or like other hardware engineering companies, but come on, guys, should we add more camera next time and maybe a little bit of oomph and dance? There's a little bit of like fanboy happening, right? So I think once you use digital collectibles as a vehicle between those two, what do you call this, like audience, there's going to be a spark of something new. The same for Rider. So maybe in the future, we have Rider 1, and we're actually going to put out our product, Alpha Leak here. It's called Digital Twin Tags. It's going to come out this Q4, and it's all about merging the physical and digital world together. Project like Satoshi Balls or Megapont can actually utilize it, even big brands. Yeah, I think that's like a good play. And lastly, just to wrap up the conversation, yeah, I think just the relationship behavior is going to change. That's how we think of it, right?
So how do you think NFTs incentivize that change in behavior versus a traditional hardware company? And have we seen any examples of that in the space, or do you think it's just starting to evolve now?
I think all the pieces are there. It's just a matter of evolving the current infrastructure. For example, you have the marketplace like Gamma, and then you have like NFT communities such as Megapont, and you also have like Muneeb and VaynerMedia, Jessica Greenwald, right? So there will be a scenario wherein, for example, a Megapont will do. So I'm just gonna play a scenario here for everybody. So you have the physical product and it's platonic rendering, and now we call it digital twin, right? So I'm very bullish on like redeem and retain and how NFT marketplaces like Gamma will actually include it on their marketplace. So maybe I get a notification about an upcoming Megapont drop, but then it's their thing. It's this jacket, Megapont jacket. But because I already own two of their jacket from before, then I just instant get whitelist, right? And I have my own time of the day to actually complete the subtraction. And then the day comes, I have the jacket, and that jacket I just scan, and then I receive the NFT on it, which I could also rock on the metaverse. So when I rock it on the metaverse, also in real life, it has locational trigger, the Megapont jacket. So maybe I go to a Megapont meetup, a Megapont event, and then it further enhance social experiences. And then my wallet will be filled with a lot of digital goodies, from proof of attendance all the way to exclusive access to a Megapont party or like Satoshi Ball party. Imagine you also have a monitoring data for that jacket. Maybe I wear it on the streets, you know which places I go. I, as a user, can now sell it to the manufacturer that made those jackets. And I get the UST, a stable coin of it, right? Of course, if you're like privacy, you're like a cyberpunk, all anonymous, you can also opt out. Then the question is, what does a role that a marketplace plays here? Maybe I get bored. I'm going to sell my Megapont. I'm out. I'm done with crypto. And Jessica here wants it. So Jessica will actually receive the jacket. But before that happens, you need an NFT and the funds on escrow. And that's where the marketplace will come in. So the marketplace will take the NFT and escrow. I send the jacket to Jessica, and Jessica, he saw the jacket and she scans it and it proves authenticity. Now Gamma will release the NFT and fund. That's how I see it play out in the next like 9 to 12 months. So I'm very excited because you're just going to see it merging together, like physical and digital world.
Yeah, I think it seems like now is a time when a lot of people are starting to focus a lot more on infrastructure and some of these like primitives that you're mentioning that people need to continue the development of NFTs, like these fundamental protocol level things. I know Mark, for example, a big part of the stuff that you're working on with Apes Together is focused on tooling. What do you see as like sort of the fundamental tooling primitives that are missing from NFTs right now that will be important for, I guess, both NFTs and marketplaces to evolve in the future?
I've taken it back just a little bit. I think it's telling to see, the most successful NFT projects now raise VC capital. And that kind of alarmed quite a few collectors. And I think it's, are we becoming the product now? Are we the end consumer, not the stakeholders of these entities? There's some big ones, Yuga Labs, obviously, and Doodles are the most recent example of this. And I think it's just these large NFT projects, knowing that to become a sustainable business, they really need to do one of two things. And one of them is to turn their collectors into their consumers. And the other one is to do what a traditional startup does. And that's just build until they build something that people want. And I think the large players in this industry now are fully aware that they can't keep minting JPEGs to people and charging 0.1 Ethereum 10,000 times every 6 months. So I think you can build tooling, whether that's to help other projects, so you become like a project launchpad or something along those lines, or you're charging for advice. You're becoming like the S&P of the crypto world, or whether it's, hey, we're going to go out and build an entertainment brand or a big media brand like Doodles are saying, right? Or another example is like Creeps, where we're going to have like fashion lines, so we're going to work in music and media. And I do think that's where a lot of other projects will just disappear. Even $1 million 6 months ago from an Ethereum mint is now worth like $300,000. And if you've already paid out to people and you've got, say, $150,000 of runway left and you've got a team of 10, the next year is going to be really hard because your floor price is now below mint and you can't raise more funds. So you either go to VCs or you do something else. So I think the move to tooling is just projects that are no longer projects, they're businesses pivoting until they find something that sticks to become sustainable. I don't think it's the industry saying, hey, we don't want art anymore. I think that's not particularly true. You see some of the pure art plays doing very, very well right now. Photography is doing well as well. So the projects that didn't have that clear vision are in muddy waters because they probably had no reason to exist in the first place.
Brian or Jessica, do you have any thoughts on that?
Yeah, I mean, when I launched Satoshibus last year, I wanted just to get into the space and try and build something and get it out there. I also met Ayub, our artist. I wanted to also promote his work and get his stuff out there. So, the word utility at the time, I was really early at the NFT space. I launched it just in June to 2021. So the word utility was actually not a thing then. And then we happened to mint out. Everything was great. All of a sudden, I now have a community. They're all looking at me like, what's next? And then, other projects started popping up. Like there was some projects that are earning people money. There was projects doing other things. And then, I'm like, okay, we'll do something then, we'll continue to advance it. And I kind of just always had the mentality of like, well, if we build something for Satoshibus, maybe it can be used for other projects. That's the kind of mindset I've had. And, when we launched Stacks Bridge, again, it's called Stacks Bridge. It's not Satoshibus Bridge. So the idea is to try and get other projects to be able to utilize the bridge and come over to Stacks as well. So yeah, it's just a cool time to build stuff right now. And I think that accessibility is also really important. I'm really excited about people who are building stuff that enables artists with no technical background to jump on. And I know that Gamma are doing amazing things with that, with their creator panel. And then everything that Mark's building as well is got to be really helpful to try and get artists into the community, because I think that more than any other blockchain, Stacks is all about community. You can feel it right away as soon as you join. So anyone who's building stuff for communities and enabling artists and other people like photographers and things to get into digital assets, not NFTs, is really cool.
On that note, just I touched so many different projects that what I see is it's totally fine to have these one-off, pretty contained projects, and ideally you're working on a longer-term vision, but that's not always going to make the most sense for every brand. As long as you're very clearly communicating what the objective, the ultimate goal of that program that you're putting together is. If it is just a one-time collectible, you use this, you display it, that's totally fine as long as you let people know up front what they're getting for that. If it's a long-term program and then you're setting up this roadmap and telling people, here's what you're going to get, you're committing to that. So as long as you're clearly communicating what a collector gets from the purchase of this digital collectible and delivering on that, it's fine to design a program either way.
I think over the past couple months, just as we've seen new NFT use cases and utilities come out, we've also seen new marketplace models come out. And most notably, for example, we have SudoSwap, which uses almost a Uniswap style model to price NFTs. So it's sort of treating them as like a pool that you can swap in one NFT in, one NFT out, and treating them all basically as the same. And one of the biggest things about this is that they also don't charge any royalties. So if a creator asks for royalties, they won't honor that. do you think marketplaces will change fundamentally from the existing model with royalties, with the structure that we have now? Or will the dynamics of royalties sort of evolve over time? Mark, I know you've been thinking a lot about royalties with Megapont. How do you feel about pseudo-swap and sort of the evolution of that royalty model?
I think broadly speaking, for marketplaces, they will change massively over the next 12 months. And they have to, these kind of meta marketplaces don't really exist in the real world. There are a few exceptions to that, but they are the rare exceptions. I think, you know, as we see with the traditional art world, you'll see marketplaces go into their specific niches, whether it's blue chips that are very expensive and buyer pays model, or it's a marketplace that facilitates some time-based auction that has a whole bunch of participants. And I think marketplaces will need to start marketing to projects and providing some value add to them. You know, we're already starting to see that people will gravitate towards a marketplace they love, right? We have that on Stacks. We have a whole bunch of people in Megapont who will only use Gamma. There are a whole bunch of people on Ethereum who will only use OpenSea. And they'll only use OpenSea even though they're financially incentivized to use LuxRare, but they still want to use OpenSea. And I think marketplaces will start to become seen as businesses with people behind them that focus on one specific niche and add a specific set of values to a collector, as opposed to being these meta market versus that, hey, we just allow you to list and sell your NFTs. Whether you go down the analytics route, whether you go down the 0% route and say, actually, these non-fungible tokens are fungible now. Hey, have at it. Here's a swap pool. So I think we'll just see marketplaces go into specialized niches, which I do think will be really good for the space. And each marketplace will determine where they best fit, I guess, with their user base.
You know, this is interesting because I see a lot of brands actually trying to create their own ecosystem for their digital products instead of recommending that a user go to any of these marketplaces. Because, you know, I'm dealing with brands whose customer base is not Web3 savvy, right? So to even try to get them to install a wallet, go to a site to mint a thing, and then tell them like, okay, now there's this whole other platform where you have to go look at and learn about these other digital collectibles that you could potentially buy. It's a lot. So I see a lot of brands wanting to create like a safer space for their non-technically inclined user base where they could just go to, you know, type in client name website.com/digital collectibles or marketplace. And that's where they'll be showcasing all of the NFTs that they've created for the various programs that they're launching. And I think for NFT marketplaces like Gamma, if they provide solutions that make it really easy for brands to do that, to just have a white labeled like landing page for all of their digital collectibles, that's what people are asking for now.
Go ahead, Brian.
Yeah. Sorry, yeah, I was just going to say there's a ton of different angles to it. You know, like you say, the brands are coming at it and trying to target it that way, and then you've got NFT collections like ours, and you know what Jamil said about the pseudo-swap thing. I think it's really interesting when you start merging the kind of DeFi space with the NFT space. You know, with a huge DeFi boom, obviously on Ethereum in 2020, a lot of rug pulls, of course, as well, but like a lot of interest in that space. So I think that's really interesting to me to see how all that evolves. You know, when you start to introduce liquidity pools into digital assets, how that all plays out. I think that's really interesting.
I would say that projects should be very careful with what they do. You know, because a big Web2 brand comes in and builds their own marketplace infrastructure, doesn't mean that every project should be doing that. You know, it's very Web2. In my last startup, we worked with one of the biggest auction houses in the world providing KYC, and we built this whole big fancy platform. We're like, oh, look how amazing this is. And they essentially said, no, let's throw that away. We're using the API because we have to control our entire brand experience. It's so important to us. So they want to control everything. They have to control everything. Whereas a smaller NFT project shouldn't try to do that. You know, Megapont had its own marketplace. It was great until users expect you to add features. And, you know, for anyone who's run a Web2 startup, you focus on what you primarily want to do. Don't go ahead and rebuild absolutely everything, right? So we very quickly have shut it down because we can't add features like Gamma can. We can't keep up with marketplace innovation. So don't just follow big Web2 brand, because the Web2 brands are going to do that because they have to do that in many ways.
Yeah, it's been really interesting to see the dynamics around marketplaces. Some of the assumptions have been quite counterintuitive. Like, everybody assumed that as soon as OpenSea added Solana support, they would steamroll Magic Eden, and that didn't seem to happen. Or that as soon as Coinbase, which is a behemoth, rolled out their NFT marketplace, that it would take over the world. So it's been interesting to see some of those counterintuitive outcomes come out. In the last 10 minutes, if you could change one thing about the way current NFTs, so when we're talking about utility or just the standards of NFTs, or the way that marketplaces work, if you could change one thing about the way NFTs or marketplaces work, what would that be? Lewis, do you have any thoughts?
I got cut off. Was it my turn?
Yeah, just one thing you could change about NFTs or marketplaces.
Yeah, I think not more so on the NFT side, but more so on the metaverse. I think metaverse is great, but in order to reach mass adoption for like all the marketplaces and NFTs in general, we should look at, okay, how do we actually use technology in order to better real life human experiences? Because that's where adoption is gonna come in. I don't think adoption is gonna happen on the metaverse, if we're being honest here. The last thing that I want is to get stuck on a PC. I've been home for 2 years with COVID. 2 years took away on my prime time, right? The last thing that I want is, okay, guys, let's go in the metaverse. Let's do this. No, I think we should change the way of thinking. What if we could actually build metaverse on our existing reality? I think that's how we should all think as builders moving forward. That's like my last piece of the puzzle, I think. But maybe the others could chime in more there as well. But yeah, that's like my conclusion.
Yeah, I would say, I mean, we're going to get there eventually, but if I could change it today, it would be, the onboarding, the kind of, the people have to obviously download, like Jess said, have to download the wallets and get all this thing, and it's a big, scary process, so I know we'll get there eventually, but if I could change it today, it would be just, make it super easy for people to get involved and own these digital assets, use the cool utility with them. So as I say, it's coming, but, I wish it was today.
I could jump on that. I wouldn't really change anything about NFTs specifically. It's really simple technology that just sits behind other things that we're doing. It's the interfacing with that NFT, with that data, the user experience of interacting with it at all that I would change, like making it easier for me as a collector, a consumer, to actually do something with that digital collectible, whether that's display it or reassemble it or remix it and mash it up with other digital collectibles. I'd love to see more innovative, interesting, fun things that I could do with the NFT itself for whatever content is attached to my NFT.
I wish that, well, my wish is I think we need a big paradigm shift in expectations from participants in the market on both sides, whether that's creators of projects and collectors of NFTs. I think it's unrealistic to expect that you can buy something for $50 and it be $1,000 in 1 week's time, and you somehow have a right to berate the creators of the project or anyone involved with the project when it doesn't do that. And I also think that people need to understand that the underlying price of an NFT is, for the most part, outside of the project's control. And again, it's not up to the project to control that price. But likewise, a project really has a duty to deliver on what it's promising. If you promise the world to your collectors and you don't deliver on anything, then they're going to come after you. In the traditional startup world, you can't raise $1 million and run off and do absolutely nothing, and then a year later say, oh, sorry, we tried, but delivered absolutely nothing. You would be held accountable. So there needs to be a little bit more accountability. And I think it's just taking a realistic view on this industry as a whole and try to support genuine creators as opposed to, hey, I can get rich overnight by potentially buying this that might go to zero. And I think speaking to Stacks specifically, it would be really good to focus on those smaller creators a lot more than we are. Megapont is a big project, it would be great if the smaller guys in the community have as big of a platform as we do, from absolutely everyone, right? We need little marketing from most people. It's the individual creators who need much more.
What do you think are the main things that could help improve the exposure for smaller artists on the marketing side?
Well, discovery from a marketplace perspective has always been hard, right? It's hard in an almost Web 2 marketplace. It's very hard to find apps. I mean, go to Amazon, right? And go to Amazon and just browse to buy something. It's basically impossible, and their business model isn't built around that. It's, roughly what you want, you go there. But clothing is a good example. When you're browsing to buy clothing online, it's pretty much a nightmare anywhere. And I think NFTs are very similar. So discovery is a hard problem that I don't have a specific answer for. I think it's one for marketplaces to play around with different ideas and to challenge certain assumptions on that. But we need to do a lot more at taking risks of pushing creators who we know are sincere in their work. I think, speaking from a project perspective, we have a tendency to not promote creators when we know the individual personally. We know that their work is genuine. We know that they're not a rug pull. We know they're working really hard. And we know they're putting out quality work, whether it's just on the art or their utility roadmap is doing something innovative. And we don't promote those people and give them a helping hand as much as we should. And I think that's true to almost all market participants. We need to take more risks on promoting individuals when we can at least be somewhat confident of their intentions. I think we saw some rug pulls last year, and because of that, everyone is scared to now push out anything. However, it's now the norm that someone is doxxed, and you learn a little bit about a creator. So, someone made a good point to me in the Megapont Discord that one passing comment, I think, from myself in Discord turned some random collector into the biggest whale on one of the other members in Megapont's project. And it was just one comment. They listened, they saw me promoting their art, and they went out and bought a whole bunch of it. So I could do a little bit more on that. I think Megapont as a whole could, and I think everybody else, specifically in the Stacks ecosystem, could do more at taking risks on smaller creators. It won't be a home run every time, but there'll be something there for sure.
Definitely. And actually, we've seen on Gamma, at least over the past few months, that a larger and larger proportion of the volume has been on these auctions from smaller artists that have come over from platforms like Tezos and others that have just come to Stacks, release one or two art pieces and put them up for auction, as opposed to these 1,000 or 10,000 PFP style projects with a roadmap. So it's going to be interesting to figure out how to evolve our marketplaces to better support those creators. Because if you go on OpenSea's homepage or something, it's either curated or showing top or trending collections, which may not be the best incentives for lifting up smaller creators.
I think it'd be fun to see marketplaces also incorporate tools that give creators the ability to promote their work within that marketplace, like merging the apps of social media and the marketplace. So you can actually buy the product that you're looking at while browsing right from the platform that you're in. And that as a creator, you can share what you're working on with everyone who's already in that platform.
Yeah, I really love that idea. I think over the next few months, I'm really excited to work with all of you in sort of helping evolve Gamma and I'm sure all the other marketplaces on Stacks and elsewhere to better suit the needs of creators, to help evolve with the changing use cases of NFTs, as Lewis mentioned, with things like Rider and physical goods and hardware projects. So thanks so much, Lewis, Jess, Brian, and Mark, again, for prolific creators and builders in this ecosystem. There are no better people to hear from than this. So I'm super grateful for their time. And I'll throw it back to you, Kyle.
Thank you very much, Jamil, Luis, Jessica, Brian, and Mark. What a great panel to come to a close of this exciting Bitcoin Unleash and Builders Edition. We got a chance to cover all kinds of major topics today, everything from what to expect in the new and upcoming Stacks 2.1 upgrade, due out early Q1 of 2023, all the way through all the categories and all the areas that we focus on as builders and as investors and as a community together, all the way up through marketplaces and NFTs, also as noted, digital assets as well. With that, I believe we have come to the conclusion of our day and of our time here today. A big thank you to the Stacks Foundation and to our sponsors, Hiro, Xverse, Citycoins, Despread, Damon, Mechanism, and Fungible Systems. And of course, to each and every one of you for tuning in all day today and participating in all of our sessions. If you haven't done so already, please do reach out and connect with all of today's speakers and with each other as you go off and continue to build. That said, I'm your host today, partner at Stacks Ventures, Kyle Ellicott. Until next time, take care, Stacks fam. We'll see you soon.
Thank you all for joining us. What an amazing lineup of speakers today. And the great news is that this is just the beginning. There's a lot more coming down in terms of technical upgrades, which you heard about today, new applications, and some exciting things we can't wait to announce. So if you want to get more involved, on behalf of the foundation, I invite you to apply for a grant. If you have something you want to build or contribute, or if you want to learn Clarity and start developing smart contracts, we offer free education, whether it's tutorials or camps. We have tons of tools to help you learn. Or if you just want to get more involved in governance, which is the way to determine what's going to happen with the blockchain in the future, we would love for you to learn more at stacks.org and see all of the resources the foundation can provide. And on top of that, you can always follow us at Stacks on Twitter and check out stacks.co to hear the latest of what's coming and where these upgrades will really change building on Bitcoin. So thank you for joining us, and we look forward to seeing you as part of our community.
Hey, everybody. Thanks so much for joining us this morning for Bitcoin Unleashed Builders Edition. My name's Kenny. I am the developer advocate at the Stacks Foundation, where I focus a lot on developer outreach, developer education, basically just making sure that developers are as successful as possible building on Stacks. So what are we going to be going over today? We're going to be talking a little bit about why you might want to build on Stacks. So if you're new to Stacks, if you're curious about it, this will give you a lot of insight into what some of the unique advantages are over other chains, why you might want to build on it. If you're already familiar with Stacks, hopefully this will be a little bit of a refresher, give you a little bit of a different angle to talk to people about Stacks. Let's get into it. What are we actually going to be covering today? So we're going to start with kind of going back to what the original intent of blockchains actually is, what that original intent was, and why we want to build blockchains, what they're good for. Then we're going to kind of go into a little bit and talk about Bitcoin, which is kind of building on this initial context a little bit, and talk about how Bitcoin is arguably, in my opinion, the best model for a blockchain when we have that context in mind of what we want to actually use blockchains for. And then finally, we'll kind of go with this layered approach and finish off by talking about Stacks and talking about how Stacks sort of unlocks the latent potential of Bitcoin and how that all comes together and works together to create this sort of global trustless economy that we're trying to build with blockchains. So first off, what actually is the original intent of blockchain technology? I think we can actually get a pretty good clue of this from going back to the very first line of the Bitcoin white paper, which says a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. So we actually get a lot of clues as to what the original purpose of a blockchain is from this simple sentence. So what are these central goals that we can kind of pull from this statement? And I think it can really be boiled down to one phrase, and it's an elimination of forced centralized control. To go back to the statement from the white paper, it's without going through a financial institution. It's kind of a key part of this, and it has massive implications, more implications than most of us, I think, generally realize on a day-to-day basis. I was just reading literally this morning before this event that some guy took his daughter to Applebee's, had $10,000 in his bank account, his debit card gets declined, he checks his email, and his bank just decided to shut down his account with no warning and no reason given. And this kind of thing is, when this happens, it kind of makes you realize that if you want to, this is sort of a negative benefit in the sense of it eliminates the bad thing. But if we want to go to the positive side of things, blockchains also enable true ownership. So you take this money example again, you have your money stored in the bank. You do not actually own your money. You are lending it to the bank. They are the ones that are in control of it. And so really what a blockchain is it eliminates this forced centralized control and it enables true ownership. So those are kind of like the big overarching high level goals of what a blockchain is supposed to do. And they really do this because they are essentially ledgers. And what they're doing is they're recording all of these transactions and all of these things that happen over time in a way that is open and accessible to everybody and can't be changed. And while a ledger sounds like a simple concept, it actually has tons of implications for what we can actually do with this technology. But it's important to actually look at what we need in order to build an effective blockchain and effective ledger. So what sort of properties do we need to actually accomplish something like this? The first thing is that it needs to be open. It has to be accessible to everybody, not only to join and be a participant in the network, but also just to see what is happening. So that's an essential component of this, is it has to be open to anybody. There can't be any gatekeepers that are allowing access to some or not allowing access to others. And then the way that the network actually operates, whether you want to call that the consensus mechanism, something else, the way that the network actually operates needs to be as easily accessible to the most people so that the most people can contribute to the security of the network. The more you raise those standards for what's required to join and be an active participant in the network, whether as a follower node or as a miner, the more you're gradually starting to centralize that chain, and we'll get into this in a little bit, but that has other implications. Second property is it needs to be immutable. The entire point of having a ledger like this is that it cannot change over time. It's a permanent and perfectly true historical record of everything that has ever happened on that chain. And without that property, it's not a blockchain. It might be a peer-to-peer network, which have their own uses and are great, but it's not a blockchain. And this is one of the key things that is different, that makes a blockchain differ from other decentralized technology, is this immutable permanent record. So it can't be changed. Once the record has been added to the blockchain, that's it. It should be there forever. It needs to be stable. So if we're talking about something where we're trying to build a global economy, on top of, it can't be going down all the time. It has to be stable and constantly running, and it has to be predictable in the way that it runs. And that can be both with timing and with uptime. And then finally, our second to last, this one might be a little bit obvious, but it needs to actually be decentralized. What's happened as Bitcoin has grown in popularity and as blockchains have grown in popularity is we've seen a ton of projects come up that are basically just riding this hype train. But if you look at how they work under the hood, they're not actually that decentralized. We're going to get into this a little bit in the middle part of the talk, but what they're really doing here is they're raising those requirements that we talked about, or they're just flat out blocking people out of the network for other reasons, in a way to kind of create this image of being a blockchain technology, of being decentralized, when in actuality, they're really just sort of a different model of the traditional centralized Web 2 architecture, but in a way that is very easily able to be marketed. And then so they also have to be consistent. This is another big one that I don't think gets talked about as much, but the rules need to be the same over a long period of time and for everybody. We can't have people coming in and changing the rules because it suits them. And so these properties right here are what Bitcoin is built on top of, but there are some potential drawbacks or downsides to this, which is where we see a lot of these other chains coming in to try and solve these problems. So what are the sort of criticisms that people generally give of Bitcoin as to why it's sort of old news, it's a dinosaur? Yes, it was the original, but we need to move on and create better tools. First is that Bitcoin's boring. So this is by design and is often pitched as a problem. This is sort of the original problem that Ethereum was built to solve. You can't really do much with Bitcoin. It's just that ledger. And it's really just a money and maybe a settlement layer, but you can't do that much with it, and that's by design. The more complex the execution environment gets, the more of an attack surface there is. The more complex the code base gets, more of an attack surface, but also just the more risk of even non-malicious, just bugs and mistakes. So Bitcoin is intentionally boring and intentionally simple. And a big key part of its ethos and why it exists is to keep it that way. Next argument is that Bitcoin is wasteful. This one has always seemed a little bit silly to me because if you look at the energy usage of Bitcoin, there are plenty of things in the world that use more energy that we generally don't bat an eye at. So why does Bitcoin get attacked? And I think the reason is because there's this value disconnect. We understand that energy is a resource that should be used in order to improve human quality of life. And so if we have something like the current global financial economy or household appliances in America, both of which use more energy than Bitcoin, we don't constantly see people going around talking about how wasteful it is because people understand that those things have value. So if you look at what Bitcoin is designed to be and what it can be, there's a difference here in how you think about what wasteful means. If Bitcoin is something that the entire decentralized global economy is built on top of, then it would take a very, very large amount of energy for that to be considered wasteful. And so this is just a different way of looking at it. And then again, this is something that we'll get into in a little bit later. But again, this is where stacks can help to sort of unlock some of that functionality to increase that value proposition. Next is that Bitcoin is slow. This is probably one of the biggest sort of drawbacks that you hear people talk about with Bitcoin and why other blockchains exist is that it's slow. And again, this is sort of missing the point of a blockchain. People want performance, they want speed. I get that. We're living in an era where user experience is extremely important, especially when we're coming from a traditional Web 2 architecture, which highly focuses on speed. But the error I think that people make here is thinking that the base chain being slow is a bad thing, when it's actually not, because without it being slow and without it having to propagate to the entire network, we again lose some of those critical properties of decentralization and security. Related to that, Bitcoin doesn't scale. The transaction throughput is pretty much the same. It's very slow, but again, not generally a problem for the base layer. We have other solutions that are built on top of that base layer that are meant to solve things like this, things like Lightning, which actually has a faster throughput than the Visa network. So the interesting thing here is that all of these arguments, all of these problems, they have hints of truth in them. And so they've inspired these other chains to come in and solve these problems. Chains like Ethereum, which was sort of the original Web3 chain that really said, okay, Bitcoin is great, blockchain technology is great, but there's a lot more potential here. There's a lot more that we can do with this. Let's take what Bitcoin did for money and let's do the same thing for software, where we have this decentralized global supercomputer that has compute power and an execution environment so that we can take the same decentralization benefits and censorship resistance and true ownership that we get for money with Bitcoin, and we can do the same thing for software. So it originally was made to solve the boring problem, but now it also solves the wasteful problem through proof of stake, which we'll get into in a little bit here. Solana, another really popular one that came to solve the slow problem. But again, when you look at how Solana operates, it's much more decentralized than Bitcoin. And so by solving the slow problem, because the data has to propagate to fewer nodes, because the nodes have higher requirements, you may increase speed, but you're decreasing the decentralization and security of the network. And then we have these newer sort of modular build your own blockchain systems like Cosmos and Celestia. These are interesting because they're made to solve the does not scale problem. But what I think is the drawback with these is that if we're talking about something that is building an entire global economy, each individual organization spinning up their own blockchain doesn't really make sense for that, because then we're not in a much different place than we are now. It's not to say that this doesn't have its use cases. It does. Like, for example, Walmart right now is experimenting with using a private blockchain in order to run their supply chain systems. That's a great use case for something like Cosmos or Celestia or a proof of stake system, where the scale of the problem being solved is much, much smaller and much more particular to one organization or even a small group of organizations. But when we're talking about this core problem that Bitcoin was meant to solve, which is this global peer-to-peer decentralized money, and then what Stacks is designed to solve, which is to build an economy on top of that, these design choices don't really make sense to do that. So they solve different problems, but I don't think that they're good to be like sort of the primary global decentralized software system. And then we have other ones that are coming up now, Near, Avalanche, and others that are all designed to solve different problems that came up with Bitcoin. They're designed to solve different problems with Ethereum. They all have these different design choices that they make, and they all claim to solve these different problems. But the key thing to keep in mind is that they all have to sacrifice some critical element of blockchains in order to do this. They all have to sacrifice one of those elements that we talked about before at the beginning in order to accomplish these things. So the thing we need to ask is, are the problems presented by these other chains, are they real? Are these issues that Bitcoin has, are they real problems? Or are they strengths and properties that we need to sort of find a different way to address? So these chains correctly diagnose problems, but they don't necessarily provide an adequate solution. And I have an asterisk right there on correctly, because while they're identifying things that are happening, I think that they are incorrectly diagnosing them as problems, when in actuality they are features and they should not be modified, and we should layer other systems on top of that foundation, keeping those properties instead of trying to change the foundational system itself. Because then what happens is that they attempt to solve these false problems, but all they're really doing is introducing new ones in the process. So it's important here to keep our context in mind, going back to the beginning of what we talked about. The goal here is to create a global economy that eliminates forced centralized ownership and enables true ownership. That's the goal here. So if we look at the two most popular consensus mechanisms, which are currently proof of work and proof of stake, Ethereum just recently successfully completed the merge and moved over to proof of stake. And so I kind of want to spend a little bit of time comparing and contrasting those, because currently proof of stake is by far the most popular consensus mechanism for building Web3 apps on top of. So, and proof of stake is pitched as this fix to proof of work. So it's a way to achieve the same security without the drawbacks. That's the sort of the elevator pitch that we hear all the time. If there was a way to achieve the same security of proof of work, but with 99.9% less energy usage, why would we not do it? When it's pitched like that, that's a great argument. The problem is I'm very skeptical of the claim that it provides the same security. So proof of stake is built on certain technical foundations that have really important social and economic implications. The first of these is that it's a negative incentive system. So something like proof of work, the miners are working in order to gain a reward. They're working to gain a reward, and the worst that can happen is nothing. There's no negative incentive there. If they fail, if they try an experiment in their mining rigs and it doesn't work, they just don't get any Bitcoin, but they're not losing anything. If you look at something like proof of stake that primarily operates off of a slashing mechanism where validator nodes are punished if they do something incorrectly, that's a much different environment, and it's a fear-based environment rather than an exploration and inventiveness-based environment. This doesn't seem like that big of a deal until you start to draw this stuff out long-term, which is what I think is important to do. I want to be clear when I talk about this. I don't think proof of stake is useless. I think it has its use cases like we talked about a few minutes ago. I also don't necessarily think that we're going to see most, if any, of these negative impacts in the near future at all. But what I'm looking at here is I'm looking to expand out the timeline and look at if the world becomes blockchain enabled 100 years from now, what system do we want that economy to be built on? When we have something like a negative incentive system where the people in charge of running the network have their own personal assets staked into making sure that the correct outcome happens, that really slowly starts to create this sort of toxic fear-based environment. And I think we can see this in the systems that are alive and well today. When you have a system like this in which the majority of people that have assets within the system have the potential to lose those assets if they don't go along with what's seen as correct in the system, I think we slowly start to see this scope creep where the people that have the most social influence on the system begin to just slowly get their way over time, usually in the name of safety or security for the users. And so this is the primary concern that I have with proof of stake and with Ethereum, is that over time, it's slowly going to morph into basically the exact same system that we have now, where the people that are at the top and the people that have the most invested into the current system have the most ability to also continue to gain from that system. Now, I'm not talking about governance, because I understand that your stake in a proof of stake system does not impact your governance, but what it does impact is your ability to decide what transactions should and should not get published. Again, I don't foresee this becoming an issue in the near future. My concern is the slow progression that this sort of incentive environment is going to create over the course of the next few decades. The second issue is that it's relatively permissioned. It's a minimum of 32 ETH that you have to stake in order to become a validator. There are technical reasons for this, but the point is that that's a very large amount of money in order to become a validator. Now, usually the argument here is, okay, but you can join staking pools. And while that's true, that then does just contribute again to this decentralization or centralization aspect where yes, you may have a pool of multiple people that are all staking their assets, but that singular organization is still what is in charge of validating. If we look at something like Coinbase, which has a very large staking pool right now, they are currently staking, I think, something like 25% of all of the staked ETH right now. And that's a centralized traditional organization that's subject to regulation just like anything else is. And so it's just another one of those patterns that we see that may not be an issue for a long time, but over time, if we continue that trend of having such a high barrier to entry in order to become a part of the network, I think we're going to start to see problems there. The other part of this is that, let's say that you're a Bitcoin miner, you can buy a Bitcoin mining rig for a few $1,000s, or you can join a mining pool if you're not quite to the economy of scale as being able to be a profitable solo miner. So you can join a mining pool. The difference here is that you can point your node at any other mining pool you want instantly. The way that the staking system is set up right now, one, you can't just become a validator whenever you want, even if you do have the 32 ETH. You have to go through this process of being accepted into the validator network. And then on top of that, right now, the code to pull out your stake hasn't even been written yet. And so there's no guarantee that you're ever going to get that ETH back. Now, I'm not gonna be part of the camp that says that Ethereum can't ship. I think they proved that technologically they're capable of a lot with this merge. That was a huge achievement. But the fact is that so much of what proof of stake systems currently rely on is future solutions, not solutions that exist right now. And then this is related to the point that we had before, but I think there's a pretty clear path to oligarchy when you look at a proof of stake system and how it works, because the incentive structure actually makes it undesirable to have new validators, because anytime a new validator comes in, the current validators get their assets diluted. So they're not making as much money when a new validator comes in, because the ETH block rewards are getting distributed out to more validators. And so if we have these singular or small organizations that have such a majority stake in the network, what I don't think is going to happen is I don't think it's going to be a just blunt, nope, nobody's allowed to become a validator. But again, I think this is where we'll start to see those social and economic patterns of the people that are in control slowly implementing tiny little stepwise changes in rules to the point where it's almost impossible for anybody else to come in and be a part of that network. And then at that point, we have the exact same system that we have now. We have a system where who controls what transactions do and do not get recorded to this ledger is a very small group of people. And that's exactly what we're trying to avoid with this. And the last thing is that it's subjective. So if we look at something like proof of work, it's an objective fact, which is the correct chain, and it's the one that has the most work done. But so much of a proof of stake system relies on social consensus. What the real chain is basically just what everybody decides that it is. So there's no objective reality here to anchor the chain to. It's a subjective social opinion and social consensus, which again, in some systems may have some benefits. But when we're talking about building a global economy, that's a very dangerous precedent to set. And then this one arguably may be temporary, but if we look at singular organizations like Coinbase and Lido that collectively currently stake almost 50% of all of the staked ETH on the network, we're now sort of flipping this pyramid that a blockchain should be built on, where the most stable layer should be at the bottom and support all of the smaller layers on top of it. When we have this proof of stake system where so much of the stake is controlled by these singular organizations, that just creates another bottleneck in security risk, because so much of the liveness of the chain actually being able to run is dependent on such a small amount of people. So is proof of stake worthless? No, I don't. I don't think proof of stake is worthless. We talked a few minutes ago about how companies like Walmart are experimenting with private blockchains. I do think that there are other use cases for blockchains outside of a decentralized global economy. I just don't think that proof of stake is the correct protocol and the correct consensus mechanism to apply to something like that. Now, Stacks and Bitcoin, Stacks and Ethereum actually have very similar goals to solve a lot of these issues with Bitcoin and sort of just move it to the next level, but they do it in very, very different ways. So to wrap up that part, proof of stake has value for certain use cases. Do not think it's appropriate for a global decentralized economy. But that's not to say that there are not legitimate problems with Bitcoin that some of these protocols seek to address. I just think that they address them in the wrong way. And I think that Stacks addresses them equally well, if not better, without a lot of the drawbacks of a proof of stake system that we just talked about. So the first thing is it's not sustainable. I'm not talking from an energy perspective here. That's a different argument. What I more am talking about here is at some point, the block rewards for Bitcoin are going to go away, and the network is going to have to sustain itself on transaction fees alone. At the current trajectory, that doesn't seem super likely because the incentives are not going to be enough to have it be as decentralized as it is now. The next thing, that there's no value accrual. So there's no built-in way in order to generate a yield on your Bitcoin. You can hope that the value of Bitcoin goes up, but there's no way to actually generate a yield on that Bitcoin without just handing it over to a centralized custodian. There's no meaningful apps on Bitcoin. Talked about this before, but Bitcoin is a very, very limited in its scope of what it's actually able to do. And so because of that, it's very difficult to build actual meaningful apps on top of it, which can then bring in more capital and sort of unlock that economy on it. And then it does use a lot of energy. This is often pitched as a negative. I actually don't see it that way. I actually think this is one of Bitcoin's main strengths, is that it actually requires some external expenditure of resources in order to create new Bitcoin in order to protect the network. But the more functionality that we can get out of Bitcoin, the further that energy usage will go. And if we can do that in a way that's not going to compromise Bitcoin security, then that's the way we need to do it, which brings me to the Stacks way. So what Stacks is really meant to do is solve a lot of Bitcoin's problems, but without Ethereum's weaknesses. So this right here is a very simple chart, but I really like the way that it's laid out because it very simply sort of highlights the difference between the Ethereum approach and the Stacks approach. So if we look here on the left, we've got Bitcoin here as the foundational base layer, and we've got Stacks there on top of it. We just heard from Sarala about subnets. That's another layer that would be on top of that, on top of Stacks right there. And what this is doing is that this foundational layer that's bigger at the bottom, we want that to be as strong and robust as possible. We don't necessarily care as much in this particular area about speed or scalability. We want this particular foundational layer to be strong and solid and honestly be as simple and boring as possible because it needs to be the most stable. As soon as you introduce complexity, you introduce more risks, which brings us over to the right side. This is the difference in how Stacks handles the layering approach to adding functionality to Bitcoin versus how Ethereum handles its layering approach. A true layer 2, like what you see in Ethereum, is going to only inherit the functionality of the base layer, but maybe make it more scalable. So if we look at something like Lightning for Bitcoin, that's taking the same functionality of Bitcoin, but it's making it much, much faster and much more usable. But you still can't do anything else other than basically send and receive money using it. Not a bad thing. That's another perfect use case for this layering approach. We have Bitcoin as the foundational settlement money layer. We have Stacks as the programming layer, which can help us unlock an actual decentralized economy and real useful decentralized finance using Bitcoin as the money. And then we also have Lightning, which can be the payments layer on top of that. With Ethereum, with everything being at the base layer like that, you get more and more complex, which introduces more and more security risks down the road. The Ethereum code is massively complex. And so I think that a better approach is this more separated layers approach. So one of the things that Stacks does is it just expands this utility of the energy expenditure. So we talked about this a little bit before. One of the main flaws of Bitcoin is that it uses a lot of energy, but I think this perspective will shift the more useful Bitcoin gets and the more people perceive it as being useful, then people understand what the energy expenditure is for. Stacks can really help us do that because it unlocks a lot of new use cases for Bitcoin. When I talk about new use cases, what I'm really thinking about here is all the things that you can do in the traditional financial system right now. Get a small business loan, get a mortgage, get a car loan. All of those things should be able to happen with Bitcoin, but you should be able to do them without having to trust somebody else with your Bitcoin, which is currently the only way to do it. Or you can move it over to arguably a less secure chain like Ethereum. Stack solves that problem. It also expands functionality without increasing complexity at the foundation. This is what we just talked about a little bit. I do have the asterisk here that I want to go over right now, and that's because I don't think that this functionality does not exist in the way that it needs to right now. It's a work in progress. So I want to be careful here with saying what Stacks can and can't do at the moment. The real ideal vision for Stacks, where it unlocks this decentralized economy with Bitcoin, that's a work in progress and it's on the way. But this is something that I see really starting to expand and get better in the future, but it is limited right now. And then so it unlocks this potential for decentralized value accrual. So if you look at staking Ethereum, you get a yield on that Ethereum that you're staking, so you're generating value accrual. So a lot of people want to be able to do the same thing with Bitcoin. Currently, the only way to do that is to trust it with a custodian or to bridge it over in the form of wrapped BTC onto the Ethereum network and have DeFi protocols there. But then again, you're having to then trust the proof of stake system with your Bitcoin. Ideally, we would like that to all happen within the Bitcoin ecosystem. And then finally, we have safer smart contracts with Clarity. Clarity is the smart contract language that Stacks utilizes, and it's intentionally built with safety and security in mind. So we've taken a lot of the lessons that were learned from Solidity and from Ethereum, and we've made a programming language that makes it much more difficult to write some of those bugs and much easier to write safer smart contract code, which again, if we're talking about something that's handling people's assets, very important. And then the big vision here is that Stacks allows Web3 built on Bitcoin. So if we go back again to the very beginning, what the purpose of blockchains are, what the purpose of Web3 is, it's to eliminate this forced centralized control and to enable true ownership. I really do think that Bitcoin is the best foundation to build that on top of, but it's not going to get there on its own, which is why we need something like Stacks in order to work together with Bitcoin. Stacks needs Bitcoin. Stacks literally cannot exist without Bitcoin. It's not trying to compete with Bitcoin. And I would argue that long-term Bitcoin also needs Stacks in order to unlock some of this functionality and activate that economy. Thank you so much for being here today. My name's Kenny, developer advocate, Stacks Foundation. There's my Twitter. And if you go to start.stacks.org, that's a great place to sort of get introduced to the process of Stacks development if you're interested in building on it. Thank you so much.
Hello. Okay. Okay, good. Thank you. Cool. So, hello everyone. My name is Hiro. I'm a staff engineer at Hiro, which is a company that I joined 3 years ago. So, yeah, just a bit of background before starting the presentation. During my first 2 years, I mostly dedicated my efforts on the Stacks blockchain. And after the launch of Stacks 2.0, I started focusing on developer tooling. And yeah, so this talk is about Clarity, a project that gently started on the side and that became a daily activity a year ago with a dedicated team. And so during this presentation, I will walk you through the different features that we have in Clarinet, and I will focus on two very recent features that were being discussed a bit. So yeah, in terms of features being covered, we started Clarity with this simple idea. The goal was to enable blockchain engineers to be productive when they write smart contracts. When we launched Stacks 2.0, we had some tooling in place, but it was very cumbersome to interact with the blockchain and just check the validity of contracts. And so, yeah, so that was the very first feature, and it did require some work, special work. So we basically had to extract the Clarity VM, which is a component that we developed in the Stack blockchain for parsing smart contracts, analyzing smart contracts, and then executing them when developers send transaction and contract calls. And so we did this extraction in a very special and unique way. We make it so that component was able to be executable as a WASM module, and we'll see how it's going to be very important for the future. So we had this first feature, then we added something else, which was how can we test contracts efficiently? Like, what is the best way to write tests for smart contracts? And so for that, we came up with a pretty neat integration with Dino, which is some sort of Node 2.0 created by the creator of Node, actually. And so, yeah, this new runtime was written in Rust, which was very convenient for us. So we integrated
that module as a library. And so with that, we have like a product that developers can use in a zero configuration fashion, meaning that they just have to install Clarinet and that's it. Like they don't have to deal with dependencies and versions, and yeah, it's very, very straightforward. Then we've been working on optimizing the debuggability of contracts. So we approached that in a few different ways. So first, we augmented. So at some point, we created like a VS Code extension, and we augmented the features of that program to make it so we can step-by-step debug programs. And so we also have some sort of GDB experience in the command line. So that's something else that Clarinet offers. Then, at some point, we had all these developers writing and testing smart contracts, but they wanted to deploy contracts on chain. So we started working on that, and we will actually come back to this specific feature. And something else that we wanted to offer was the ability to see how contracts react in like a fully fledged environment with a Bitcoin node and a Stacks node and APIs Explorer. So with Clarinet, we have this ability to spin up private network on developers' machine. It's very powerful, and we'll come back to that. And so, with this feature set, we kind of put a stamp on the value proposition. And so as of today, Clarinet became like a 1.0 product. It's stable. It's been used by many developers. We received many feedbacks, and we also addressed all of those feedbacks. That's very exciting. That's a very exciting news. And so, in terms of what's next, I think that we want to improve collaboration. So how do we help developers interact with other people in the ecosystem? And we also want to handle Bitcoin as a first-class citizen. So that's something that we started doing with the latest features, but we might have to take some step backs and improve the connection to Bitcoin. So let's zoom maybe on the improved collaboration part. So there are two aspects that we would like to explore. So first, how can we help developers using Clarinet interacting with their teammates? And we also want to improve how teams interact with each other in the Stacks ecosystem. So let's talk about the latter. So we have this ecosystem. So smart contracts are pretty unique in the sense that they have this ability to communicate with each other, right? So as a company, as a protocol team, you design a protocol, like let's say, for instance, like an Oracle protocol, and then this Oracle protocol can be used for doing many things. And so, for instance, a team working on a swap protocol can use this Oracle as a pricing mechanism. And then let's say that we have a stable coins coming in. They want to be able to use that swap that will be using the Oracle. So we really want to be able to create an ecosystem where teams can work with each other. And that's something important that we want to address. I think that, we want to create some sort of primitive, some sort of consensus that would be helping teams to work together. So that's one of the reasons of introducing the deployment plans, which is something that was introduced a few months ago, I think. And so with deployment plans, the goal is to create some sort of standardized protocol for deploying smart contract on any network. So these networks can be DevNet, ephemeral, private, testnet, public, or even subnets. As long as it's based on stacks and Bitcoin, we would have the right primitives. And so we saw a few protocols launching, and we've been able to experience that deployments can be pretty complex. So today, I think that, before deployment plans, and I think even today, teams are still deploying their contracts using scripts and Stack.js because deployments are complex. So you need to handle dependencies correctly. You need to pay attention to the transaction chaining limit. You also want to initialize your contract before deploying some contract. You need to pay attention to cost. That's an interesting problem space. And so, the goal of deployment plans is to introduce some sort of domain-specific language. So today it's being implemented as like a YAML syntax. But you have a set of primitives that you can use for designing a plan that can be applied anywhere, like either in memory or on mainnet or on testnet or even on a subnet. And it's pretty so today we have these 4 primitives, so you can deploy contracts, call some contracts, send Bitcoin transactions, and then you can also use the wait for block control for structuring the deployments. But so with these 4 bricks, you can already create a lot of things, and that's pretty interesting. And so why that's something that protocols should be using. So let's say I want to create a stable coin. I really don't want to create a swap, and I really don't want to create an oracle. If I can rely on some existing pieces, then that's great. And today, if I want to pick one of these protocols being deployed, I would need to retrieve somehow the scripts that these teams have been using for deploying their contracts. And most of the case, the scripts are not committed because they contain secrets and private keys for signing transaction and so on. So you basically end up with a protocol that is really hard to redeploy and to compose on top of. So the goal is to really create a mechanism that can be open sourced. So you write this deployment script. It looks like a Terraform. If some of you are familiar with Terraform, it's very inspired from Terraform. And so you create those scripts for handling deployments. And these scripts can be committed on GitHub. They can be shared. They can be audited by third parties. And they would be reusable by community members. To come back to my use case, if I'm working on this swap, then I can pull these deployment plans for deploying an Oracle, and then I can deploy that on my personal DevNet and do some end-to-end testing. Yeah, that would be very interesting. So I'll be demoing the deployment plans after this one. And so, yeah, so we talked about ecosystem. Now within teams, that's a feature that we also introduced somehow silently in Clarinet, but it's there. We need to work on the documentation, but yeah. So Chainhook is basically a PubSub mechanism to create event source architectures relying on Bitcoin and stacks. So it goes as follows. Chainhooks is a layer that can be run in a different manner. We will come back to that. And so this layer is observing a stacks node or a pool of stacks node and some Bitcoin. And then your app can basically register some predicates that will trigger some events coming from the Chainhooks layer to your application. We will demo this mechanism. And so, yeah, so Chainhooks is available it's completely open source. It can also be packaged in a different manner, but so when it comes to staging or production, you can either include Chainhooks in your application if your application was by chance written in Rust. But if that's not the case, if you have like an app in, I don't know, Node.js or Ruby on Rails or whatever, like you can use HTTP-based communication to register new hooks and get some notifications from stacks and Bitcoins. I think at some point maybe we will be working on some sort of cloud hosted solution, and if it's not coming from Hiro, that can be coming from anyone else. Like the whole thing is open source, so yeah, you can take the library and run with it. And one thing that we added recently is the ability to use Chainhooks in Clarinet in a very, very nice fashion. And that's why we will be demoing. But yeah, so as I said, Chainhooks are basically just like it's a two-part payload. So you have, you can define a predicate. So on the left, that's like a Chainhook targeting Bitcoin transaction that will be sending a payload to localhost 3000 when Bitcoin transaction includes a P2P cache output equals to or blah blah blah. And so the Chainhook on the right is so it's a stack Chainhook that will be triggering events when CBTC tokens are being burnt by anyone calling the contract CBTC. And so, yeah, the new feature that I'm going to demo in a few minutes is solving like an interesting problem. So today, when you start working on a smart contract, like let's say we have a team working on a smart contract, you usually have different profiles. So you have like one blockchain engineer working on the smart contracts, and on and you sorry, there's a typo, but and then you have like a front-end engineer working on like integrating the UI, crafting a nice UI UX experience, and like usually you have some sort of tunnel at the beginning, because like the blockchain engineer starts playing with clarity, the contract, and yeah, like it can take a few weeks or a few months even to like have like a first version that a front-end engineer can look at and work with. And so with this new feature, the goal is to create like a better synergy between the contract engineer and the front-end engineers. So the front-end, so the contract engineer via the unit test create a specific test that will be emitting events that the front-end engineer can get to work on the front end. It could seems a bit abstract, but yeah, I'm going to deal with that in a few minutes. But so with that, there is like a interesting incentive where the contract engineer needs to write tests for creating these states, and the front-end engineer will be reusing the states for designing the UI and testing the UI in all the states that the contract engineer created. So yeah, good synergy, and I think it's also a good incentive for encouraging best engineering practices because at the end you end up writing more tests. So yeah, let's look at this. So I have this project, Bitcoin Unleashed demo, where I have a simple contract. This contract is a CBTC token, so it's a basic implementation of the C10 trait. So we have a transfer method, and then we also have a mint and a burn method. So in this case, we are like demonstrating how like a centralized BTC protocol could be wrapping and unwrapping tokens. So yeah, going back to the deployment plans. So yeah, in the context of this plan, I have two bricks. So the first one is retrieving an existing C10 token trait implementation from mainnet. And the second brick is taking the CBTC token and publishing the contract. So this deployment plan is a DevNet plan that we can test pretty easily. So for instance, if I Clarinet integrate. So Clarinet integrate is going to retrieve that plan. It's going to spin up a few nodes, like a Bitcoin node, a Stacks node, Stacks API, and Explorers. And it will be executing the deployment plan. And so, yeah, I should be able to see the C10 token trait being deployed along with the CBTC token. Let's wait for a few seconds. So yeah, in the mempool, we can see the C10 trait and the CBTC token, and then we can see in block 2. So this is block 1. In block 1, I can see the boot contract. In block 2, I can see the contract, the deployments coming from the deployment plan outlined here. So in this case, the Clarinet integrate picked the default DevNet plan, but you can have as many plans as you want. It's pretty flexible. And then, yeah, the funny thing is that you can also use deployment plan, not just for your initial deployment, but for deployment upgrades. Like for instance, if you want to replace a contract, or if you want to do some contract call, that's also something that you can do. Okay, so that's for the deployment plans. And so I wanted to talk about chain hooks. So I'm going to terminate the integrate stuff. Okay, so in this project, I have one unwrapped BTC chain hook that we're going to look at. So the predicate is the following. Every time a CBTC token is being burnt, I want to receive a notification on this endpoint. And so these kind of events are being emitted when the burn method of the CBTC token contract is being called. So yeah, that's something about clarity. When you call the FT burn method, there's an event authentifying that this event occurred that will be added to the transaction receipt. And so, yeah, in this case, we are observing the specific events. Okay, so in this project, I also have a simple front end developed in Ruby on Rails. That's pretty straightforward. So, all right, I'm going to start this server. And so here I can see like a basic admin page where, yeah, I will see some events happening there. And then I want to look at the test. So like we said before, as a smart contract engineer, my goal is to write contract, but also to write tests and make sure that the things that we said the protocol is doing actually work. And so, yeah, in this case, I have like a simple test where I start by minting some CBTC token, then I burn some CBTC token. So calling mint once and calling burns twice. And so now, if I just run the test, and if I pass the chain hooks that I want to evaluate, then I can see that something happened on the bottom. But yeah, so first thing, cool, the test passed. That's great. And then if I look at my UI, cool, I can see that something happened. So there might be something wrong in my test. Or maybe that was, yeah, okay. That's maybe. So that. Like, I have like a very interesting flow where, yeah, okay, there may be an issue on the parsing step, but yeah, so anyway, the goal was just to demonstrate that we can create a very nice synergy between like the contract engineer and the front-end engineer. Like you don't have to run a Stacks node or whatever, it's just you take the project, you run the test, and it builds a state that you can use for your front end. And yeah, it's pretty exciting to introduce this feature. So yeah, I think that would be it on my end. If you guys have some questions, I'm happy to take some questions. But yeah, thank you for the presentation. I'll take the questions. Chat. Can you zoom the screen? Yeah, that may be too late. Cool. Yeah, so thank you for your time and see you soon.